wanted to start by asking you not about the margins, but about the US biotech business, because you have indicated that there are continued challenges within that space at this point in time. But last quarter, I remember you had said that there are some kind of green shoots of recovery. So what is the situation now? Has that not panned out as per expectations? Is there still a funding challenge which has impacted one of your verticals this quarter?
Oh, yeah, super question. I go take a step back. If you have a look, the US biotech sector, particularly where it's funded by sort of venture capital, private equity capital coming into it, has had a really tough 18 months or so. It had boomed over the last decade and running into the pandemic, then accelerated even more during the pandemic. So during the pandemic years, we were having double the normal flow of capital going into US biotech. And then as we came out of the pandemic, it dipped. It went to a much lower level, I think, as the rest of the global economy reawakened and opened up, and therefore capital had more choices to go to. What I was trying to indicate last quarter, and actually during the second half of last year, is we were starting to see a rebound and a rebuilding of new capital flows into US biotech. So this is around biotech companies in the US ability to raise new venture capital, new funding to drive their science forward. And what we saw in the last quarter was that's back at pre-pandemic levels. Numbers I saw were about 23 billion US dollars of new investment going into the biotech sector. And that's a positive, healthy indicator for companies like us, because as they raise new capital, they then take a time to decide how they're going to deploy it, the sort of experiments that they're going to do, and then that starts to drive a pickup in demand. And that really is the sort of macro background trend to the guidance given for Syngene's shape of the year. We said we would think it was going to be flattish revenue growth in the first half, both quarter one and quarter two, and then we expected to see a strong pickup towards the end of the year and in the second half, as that new capital that's being raised now in the US starts to be spent and starts to create demand in the services industry in the second half of the year. So I think for me, at least, the story of our quarter is as expected. It was a soft quarter, but we predicted it. And it's in line with our thesis that we think there's some very positive longer term indicators, and they indicate good growth in the second half of the year.
All right. So that, so should one assume that there is no change to the guidance that you've given? As expected was the first quarter, no problems with, the margins and even the revenue growth that you have for the entire year. The first half,
Correct.
Of course, understandably weak, right?
Yeah, absolutely. If anything, I mean, a soft quarter, but it does tell us at least our understanding of what's going on in the broader market, what's happening in demand was accurate. We predicted it in line with the analyst expectations. That means the market understood that this was the shape of the quarter to expect in the first, the first quarter and the first half of the year. And so no change to guidance. We think we'll return to growth in the second half. We think we'll grow overall on revenue for the full year. We think the margins will now start to come back up. We've given guidance in, EBITDA margins similar to last year's on a full year basis. So you start to see that operating leverage come back into the business sequentially through the year. And if you do a triangulation, it must mean quite a robust second half of the year when it comes to.
But Mr. Hunt, won't the margin climb be quite an uphill task, 3 quarters to get to the FY24 odd levels, because you're at around 21% on a reported basis this quarter. And that was the key disappointment this time round, because last quarter was around 30% plus in terms of margins. So how do you expect the margin trajectory to pan out in 3 quarters for you to get to those levels?
I think it's implicit in the guidance. We think, on a full year basis, we'll be back up in the high 20s at the EBITDA level. We think profit will grow single digits. And we think that on a full year basis, revenue will grow high single digits to low double digits. And after that, it's just maths. You can triangulate from where we are to achieve that full year performance, predicts for sequential improvement in those margins and a recovery in the second half.
It looks like the street is actually putting in that math because, as you stick to your guidance, even as, there was a soft first quarter, the street was worried whether you would, scale down on that guidance or not. But now that you're confident, maybe we're seeing a bit of an uptick on the stock price as well. So soft quarter, no worries. The next couple of quarters would see some recovery. What about the other two verticals? I mean, dedicated centers and the biologics manufacturing. How has business been out there, and what's your prognosis here?
Yeah, it's good. I mean, the dedicated centers is, very solid. We've got 27 years of a relationship with one of our dedicated centers, so things don't change very much on a quarter-on-quarter basis. So very happy with what was a solid performance in the dedicated centers. And I think the biologics CDMO part of the business has been a super success. If you look at where we've come over the last 5 years from being pretty much a new entrant in biologics CDMO, we're now in sort of version 2, avatar 2 of that sort of organization's life with the acquisition we did last year of a plant from Stelis. We're investing and upgrading. We're getting that qualified. It's all on track. So that will become operational towards the end of this financial year. And that's the point we can take it to the market, start showing it to customers, and start the sales process. But it gives us super headroom for growth, which was really the strategic problem. We'd run out of capacity. We'd sold everything that we had installed, and therefore we were in danger that we would have to turn clients away. By making that decision to acquire rather than to build, we bring forward the capacity by a couple of years. And once the sort of upgrading and the qualification's finished, back out into the market becomes a sales opportunity.
Okay. Well, let's talk a little bit about the US business because, you do, besides the biotech funding piece, you also have the US elections and the possibility of a Biosecure Act, which could come into play. What is your sense in terms of how much of an opportunity that is presenting to be? Because you have indicated that you all are seeing queries when it comes to the China +1 factor. Has that culminated into anything tangible, and what can we expect? Is there any risk to the business from the US elections?
Yeah, sure. I actually think the issue's more fundamental than just a piece of US legislation. By the way, the Biosecure Act had bipartisan support, so it, almost to some extent, depending on which party wins the next election, they both indicated so far that they support that direction of travel. But I think the learning is a bit deeper. You have to go back to the pandemic and just look at how people re-examine their supply chains. So it's not particularly an issue just of one geography being the issue. It's about over-reliance on any particular element of your supply chain. If you have all your eggs in one basket, you have a resilience issue. So I think the opportunity for us as a company, and I think more broadly for India as a destination for this work, is that those lessons, the pandemic, plus the geopolitics that are enshrined in the Biosecure Act, are prompting our clients around the world to think very deeply about, do they have too much reliance or too much exposure to any one particular region of the world? Now, there are super firms in China that really do good science and good service. But if everything's in one place, you don't have that resilience. So what we've seen so far this year is a real step up in the number of client audit teams, of client visits, where they're just coming to see what we've got to offer. And they're giving, that's turning into pilot projects, which is really, I think, the theme for us and most of the Indian CRO, CDMO industry this year, testing particular services, and that then if can scale up.
All right, Jonathan, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Syngene sticking to their 525 guidance, and that's probably what the street likes. Stock is up around 3% We'll take a short break. More on the markets. We'll also speak to IGL to decode their Q1 numbers. Stay tuned.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Well, IGL reported what was a good set of Q1 numbers coming in above street estimates and a margin surprise as well. To discuss the company's Q1 performance, our colleague Sonal Bhutra did catch up with Kamal Kishore Chatwal, who's the MD, and began by asking about the margin expansion and the company's sourcing mix. Listen in.
Actually, the margin improvement has been due to two reasons. One is the lower gas cost, and the second is the improvement in operational efficiency. So as far as the gas cost is concerned, we were able to contract some volumes when the spot prices, a marginal window was there where, the gas spot prices have come down to $8 to $9 per MMBTU. So we were able to utilize that opportunity to contract some volumes. So that has been the reason. In addition to that, the Henry Hub linked contracts have been more favorable as compared to the crude linked contracts. So, and we have around 50 to 60% linked to Henry Hub. So that has been the reason. And the operational efficiency part is a permanent improvement. So that we expect it to continue to the other quarters also as well.
Okay. So give us a sense of your outlook. Now that you're saying 50 to 60% volumes are contracted via Henry Hub, what is the current gas pricing for you when you are using that as an input? How much from, say, domestic gas allocation, how much is imported? And what is the outlook going forward? Your EBITDA per SCM has improved in this quarter versus the last and the one before that as well. What is the target for FY25?
You see, our guidance has always been that 7 to 8 EBITDA per SCM of 7 to 8 rupees. So we were able to maintain that. Last quarter, we were at 6.58. And despite the price cut of 2.5 rupees per kg, we were able to maintain around 7.6. So that is one thing that we will be able to maintain, because in the last end of the quarter, in June last week, we increased the prices again by 1 rupee, just due to the cut in APM allocation. So APM currently is at 62%, 38% is RLNG, and we expect APM to remain in this range only, 60 to 62%. Maybe if one or two plants shut down, then we see slight increase and then again come back to these levels. So 60 to 62% would be the range that we expect for the entire year. And 38 to 40% would be contracted. And since our volume are significant, I mean, the RLNG volumes is significant now. So we have some flexibility that we can, rather than depending on some big players, so we can ourselves contract some volumes.
Okay, that is good to know.
Working towards that.
Okay, so let's talk about volumes. Take it forward. 8.564 MMSCMD in this quarter. You had earlier indicated that FY25 exit run rate could be 9.5. Is that something that you will be able to achieve? There have been a lot of new avenues, right? Bajaj Auto launching that new CNG bike. I know largely it's in Maharashtra right now. But do you think there are segments where you can see growth opportunities and reach your targeted mark?
Yes, that is one very significant positive for us, that the two-wheeler, that was one segment where CNG vehicles were not there. And CNG market is, I mean, if you look at the big players, it is around 25 to 30 years old. And two-wheeler was still something that was not there. CNG vehicles were not there. Now with the launch of Bajaj, and we see the numbers that's around 30,000 in, say, 20-25 days. And it is being launched in Delhi market in end of July. And maybe the deliveries in another 2 weeks. So in the second quarter, we see significant volumes of two-wheelers entering the NCR and Delhi market. And since this is the biggest market for two-wheeler, so we expect around 30%, 25 to 30% sales volume to come from here. And if we look at the target of Bajaj and the other two-wheelers, I think TVS has also announced that they are bringing out a CNG variant. And so we expect significant volumes going forward to come from two-wheeler segment. Given the fact that in NCR, there is a lot of commute and people say, for example, Greater Noida to Delhi, and everyday commute is more, and the price, that advantage that it gives, the economic advantage of 1 rupee per kilometer as compared to 2.5 rupees petrol, that's a significant for middle class, lower middle class, or the two-wheeler segment. So that we expect that it will be able to compete even with electric.
So 9.5 MMSCMD, is that the target that remains for volumes in FY25?
Yes, that remains. And because the industrial and commercial segment, we are in discussion with a few players, and because they are big volumes, and we expect them to conclude in the second quarter. And we are doing some price tweaking also to make it competitive. So those volumes will come up. In addition to that, one more fact I want to share is that outside Delhi, Delhi, there is a pressure of DTC bulk volumes going off roads, and we are still absorbing that impact. So whatever increase is there in the passenger vehicle segment, so that is absorbing the loss of DTC. But outside of Delhi, we look at the GS, the CNG market is growing at around 22%. And overall, CNG, PNG market is growing at around 16%. So that is the growth in outside Delhi market, including Noida, Greater Noida, Ghaziabad, Hapur, Gurgaon.
Okay.
So that, we expect it to continue.
Last question before I let you go. You spoke about geographies outside Delhi NCR doing really well. What kind of expansion plans do you have in FY25 and FY26? How many CNG stations will you be adding? And in terms of industrial volumes, what kind of growth are you expecting there going forward?
You see, our target is CNG station. If you see, we expect to continue the same numbers, 80 to 90 we did last year. So the same is the target for this year. We will be setting up 90 CNG stations and 3,27,000 domestic connections and 2,000 industrial and commercial connections. So that is our target. Similar to the year gone by. So the targets are similar, and it will be the same numbers going forward. And industrial volumes, we are currently at around 0.8 million. And we expect that 30 to 40% growth this year in that segment.
All right, that is about IGL. The stock lower, but that was management commentary. As we slip into a short break, just keep an eye out on the markets. There has been a formidable recovery, and as we pointed out, it's led by the IT index. So the Nifty IT index, which was showing a bit of a recovery, just as we started the show, has now moved into the green. Just about moved into the green. So the IT index comes up for you on the screen, and that's led, of course, by all the IT heavyweights. So you have TCS, which has moved higher. Infosys, still in the red, has recovered about 1% from the lows. We've seen a bigger move on Wipro and Tech Mahindra, both of them, well in the green currently, and keeping the Nifty's losses just at around 40 points, taking it higher from the lows by about 240 odd points. So we'll keep an eye on the markets as we move along. Take a short break, come back, tell you a lot more about stock-specific action on the other side. Stay with us. HDFC Bank has moved to the high point of trade, L&T doing well as well. So the IT index, HDFC Bank and L&T trying to pull together their weight on the Nifty. Reliance still in the red, but has seen a wee bit of recovery. In fact, Reliance from the lows has recovered about 1%, still in the red by about 0.25%. So let's see how these pan out. On the way down, however, we have Nestle, which is among the top losers on the Nifty in today's trading session. Of course, this is barring Axis Bank, which is down 7%. Nestle is down 3%, and that's on account of numbers that came in today itself. It's been a weak set. The revenues were lower than street expectations at 4,800 crores versus expectations of around 5,100 crores on the top line. EBITDA coming in at 1,100 crores. Again, the street was working with a number of 1,200 crores, and margins as a result of which, along with the bottom line, below expectations. What was bad was the domestic volume growth came in at just 1%. The street was working with a number between 4 to 6%, and the revenue growth for the domestic business came in at 4%. Most on the street were hoping for a double-digit revenue growth. The reason why Nestle, is falling a lot more than all the others is because, one, remember, 75% of the company's revenue comes in from urban India. So the rural recovery theme that everyone's playing in FMCG may not apply entirely to Nestle, even though there would be a positivity, but that would be just to the 25% of their portfolio, as against, for others where nearly 40-50% of their revenues do come in from rural India. The second part is raw material headwinds are ahead. We've had Manisha come here and talk day in, day out about how coffee prices, cocoa prices are at record high. So going forward, those headwinds would keep, margins or margin expansion limited for the company. And finally, because Nestle had earlier outperformed all the FMCG peers when it came to growth, because it wasn't as impacted on the way down by rural weakness, the stock was trading at around 70 times FY25 earnings. And if you compare that to all the other FMCG peers which have been underperformers, it looks like there has been a bit of a valuation premium as well, which needs to come undone or moderate a little bit. So as a result of which, the stock is, despite having underperformed over the last couple of months, is down 3% post-week numbers.
Okay, all right. That's on Nestle. That stock is down around 3% We'll take a short break now. But on the other side, in our commodity segment, Manisha Gupta will be talking to the head of Platinum Guild International. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1.
Welcome back, and joining us on the show now is Vaishali Banerjee. She's MD India, Platinum Guild International. Vaishali, hi, good to have you. While so many things happened in the budget, but Platinum clearly also got a push with 15.4% to 6.4% of a duty cut that we saw. Your initial reactions to this?
Hi, Manisha. Lovely to be here, as always. Yes, we really welcome this duty reduction. We're very pleased. I want to thank the government for it, really, because this will enable the industry to progress, to grow. The demand is robust, but this will really catalyze it. You know, I think there will be increase in platinum jewelry footprint and everything else that goes with rising demand at an industry level. More opportunity for people, jobs, and a sustainable growth in the future.
Vaishali, what is the kind of demand growth that India sees right now in sense of jewelry buying when it comes to platinum? How has that worked out in the last few years? And especially with this duty cut, are you expecting a spike in this?
Yes, definitely. We do expect a spike because, the demand has been growing year on year. It's been quite robust. Every year we grow between, anything between 15 to 20% at a fabrication level, slightly above that at retail. And now what this will do is make platinum even more accessible. The price is very consumer friendly already, and now it will make it even more accessible. And I think so the entire footprint and just the appeal of platinum can get broader. So definitely we're expecting this to boost demand in the coming season and going forward.
Vaishali, because of the price decline or because of the tax decline, what is your sense as compared to last year? Because we are getting into the wedding and the festival season as well, what is the demand that you were in any case working with, and how much have you seen an increase now with the duty cut?
So, we are really looking forward to the season. We're quite bullish. We've got great ideas lined up ahead, across all our brands. We've got very interesting new ideas. We've got MS Dhoni's signature collection and Men of Platinum. I think this is the first for the industry. So it should be, it should help us really boost demand. On the top of that, now with the declining duty, which will make the price even better than it is currently, it will just widen demand, and I think we are looking at least an 18 to 20% growth in the coming season.
Oh, that's a big one. Vaishali, also...
Yes, it's a big one.
It is. Vaishali, also when it comes to India, and we do understand that whatever platinum came into India in all of 2023, that we saw that kind of an inflow in a month, and that was because of the kind of distorted duty structure that India also saw. Would you say that all of that now with this duty cut has been taken care of?
I think so. I think that, those kind of things which get in the way of just doing business and could be quite disruptive, I think that this kind of duty structure should really address those challenges.
Vaishali, also when you look at the international markets, we are working with a big deficit yet again for this year as well. And while jewelry is 30% of platinum demand, it's about automotive, it's about electrics, it's also about EVs, where we do see a lot of industrial demand in sense of platinum coming from. Are you looking at this 30% grow anytime soon?
Well, we don't know if the contribution will grow, but what we are looking from a jewelry point of view is to keep the jewelry demand quite robust. And we're doing this across markets. There are plans across each of our markets where we operate. We are also looking at new region. We've just introduced the program into the Middle East. Now that is going to be entirely incremental demand, which would support jewelry consumption of platinum going forward. So while this is just a startup market now and we're testing waters, but it already has been quite positive in its response to platinum jewelry. So like this, we are looking at new opportunities or even new segments to ensure that the jewelry demand remains robust.
Okay. Okay, all right. Thanks, Manisha, as well as Vaishali, for taking us through that conversation. We need to take a short break, but we'll be back with more. Stay tuned.
Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current.
Well, Welcome back. Well, it seems as though the mid-cap index is going to break into the green anytime soon, and possibly the Nifty and the Nifty would follow suit as well. So just about 30 points lower currently for the Nifty and around 40 points lower currently for the mid-cap index. Let's see whether there's any kind of further buying on dips which will take place to take the Nifty as well as the mid-cap index into the green. But nonetheless, just keep your eye out on specific stocks. So I just want to point out MMTC is doing very well. That stock is up around 14% at this point in time. Remember, it's gained around 35% this week itself, so it's doing fabulously well and is building on the gains of around over 90% that it's gained in this year itself. So that stock, just keep that on your radar. And a couple of others which are in focus include a couple of these hospital counters. So Fortis is doing well with a gain of around 5% at this point. That's all the time that we have on Halftime Report. Business Lunch up next.
Fulfillment of these priorities with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50.
Stocks trade soft today, but there's no sell-off despite a sharp fall in the US indices overnight. Now, financials and metals are the big drags, even as energy and utilities eke out gains.
Axis Bank slumps on reporting a weak performance, with growth slowing in advances and deposits. Profitability takes a knock and slippages see a sharp rise. Return ratios too are the lowest in 5 quarters.
L&T manages to beat expectations despite the elections, heat wave and labour shortage hurting execution. And while the order accretion remains healthy, the pipeline sees a trim, the stock perks up.
SEBI study spanning 86% of retail client accounts in the cash segment reveals that 7 of 10 intraday traders incur losses, with those aged under 30 faring far worse. What's more, despite this, the number of intraday traders grew 300% in FY23 in a worrying sign.
CNBC TV18's town hall with the secretaries from the Finance Ministry sees some key revelations. The 12.5% LTCG tax rate won't change. Withdrawal of indexation on realty won't be reversed. STT and on FNO is only a small nudge to curb speculation. Hello and welcome. You've tuned into Business Lunch. I'm Nisha. With me, as always, is Hormaz. And flashes on the screen. In fact, it's a heavy earnings season right now. And let's address the impact of Ashok Leyland's numbers that are just trickling in on that particular counter as well. It's a slight miss on both revenues as well as on profit, net profit of the company compared to CNBC TV18's poll. And the stock is down over 2% and inching towards 2.5% drop at the particular moment. We are awaiting more numbers coming in terms of the operational performance. Revenues are up 5% on a YOY basis. But remember, it's slightly lower than what CNBC TV18 poll suggested, and on net profit as well, it is slightly lower at 525.6 crore rupees. And the stock has seen weakness after the results have trickled in. In fact, EBITDA is up 11%, 911.3 crores for that, and margin at 10.6 versus 10% YOY. So it's 0.6% of rise when it comes to margin, but that's on a YOY basis. So those are the numbers, but the stock has been plummeting on the back, and there is some weakness seen, 2.8% down on Ashok Leyland. While looking at the rest of the market, while more numbers trickle in from Ashok Leyland, and we'll focus on that, Nifty 50 on the flat line with a negative bias right now, 20 odd points lost. Some of the big heavyweights have recovered in the last half an hour of trade, and therefore there is a steady recovery seen, but still it's in the red zone. Now, when we talk about Bank Nifty, that is clearly underperforming the key indices today, taking the big hit, 0.87% down in trade. But if you really take a look at Nifty 50, from the point it opened, now it is above about 150 points higher. So there is some bit of trickling in of some bit of buying at lower levels. That is clearly seen. Mid caps is being resilient also on the flat line, but the entire screen is on the red side. Advance decline ratio in favor of the advances, buoyed by the broader markets. On my screen at the moment, Axis Bank, Nestle, Shriram Finance, Titan, as well as some of the metal counters are the ones which are taking a knock, while tech titans are the ones which are saving the day-to-day. Hormaz.
Coming back to Ashok Leyland's numbers, actually, you can call that a slight miss, but on the top line and bottom line front. But the margins look steady, 60 basis points expansion compared to the year-on-year basis. But as you were mentioning earnings, it's a very earnings-heavy day, and that has been the trend over the last couple of quarters. The good earnings are getting rewarded disproportionately, and on the flip side, any slight miss, you can see that in Ashok Leyland as well, and pull up Nestle as well. The 1% volume growth that the company reported in its first quarter compared to expectations of around 5 to 6%. That's showing up on the stock as well, now 3% lower on Nestle. So that is the earnings reaction that we are seeing. Some of the railway PSUs are selling off today. IRFC is down for the eighth straight day today, and that's the longest losing streak that the stock has seen since 2021. So 3 years, the longest losing streak, 8th day of losses for IRFC. And the shipbuilders as well, Masgao Dock, Cochin Shipyard, Garden Reach, all of them have corrected at least 20% each from their respective record highs, which they had hit just earlier this month. But staying with earnings, and we are mentioning that a slight miss is getting punished, and one of such names is Axis Bank, and that is the top loser on the Nifty as we speak, 6.5% lower, and that is after the bank reported an operationally weak set of numbers in the first quarter. Abhishek is joining in with more details. Abhishek.
the raw material. Now that's a struggling factor for Axis Bank because deposit growth is at 12.8% YOY. This is the weakest growth that you are seeing in last 6 quarters, and sequentially deposits are down 0.6% quarter on quarter, and that's perhaps the highest decline that you are seeing in last 4 quarters. So that has also led to weakness in loan growth. So loan growth is at 14.2% YOY and about 1.6% on a sequential basis YOY, and quarter on quarter this is the weakest growth in last 8 quarters. Now operating profit has declined 4.1% quarter on quarter, the weakest growth rate that you are seeing in last 8 quarters. Core operating profit growth is just 1.3% sequentially, which is the weakest rate that you are seeing in last 4 quarters. Talking about asset quality, the woes are higher than street estimate. So the slippages have come in at 4,793 crore. Analysts were working with a number of 4,000 to 4,500 crore. This is largely led by the unsecured or the retail segment as well. Annualized slippage ratio is at 6-quarter high of 1.96%. That's driven the credit cost to be the highest in last 12 quarters at about 1.04%. Analysts were penciling a credit cost of 0.45 to 0.5%. And the guidance from the management is that going ahead, credit costs will rise, and the best is behind with respect to FY24 credit cost. Gross NPA ratio has increased quarter on quarter for the first time in last 12 quarters, and that's a disheartening factor as well. Watch list has increased by almost 11% on a sequential basis. This has impacted the return ratios. Both the ROA and ROE are one of the weakest that you are seeing in last 5 quarters. ROA at 1.65% and ROE of 16.3%. Now CASA ratio is also one of the weakest in last 16 quarters, coming in at 41.8% versus 43% in the previous quarter. But this is an industry phenomenon wherein you are seeing CASA ratio decline for majority of the banks. PNL, both the ANA and PAT is on a beat on our poll, but they have a one-off income with respect to interest on income tax reversal of about 100 crores in this PNL. Back to you.
All right. Thanks so much, Abhishek, for getting us all those details. And Hormaz, of course, the deposit growth is a concerning factor for the entire banking sector. And a few points on that is that, 3 to 4% on saving deposit rates when the interest rates have risen. And on the other hand, equity market giving us better returns. So the country is very, very aware of where they are making money. So banks feeling that heat. Now, L&T, on the other hand, is rallying on the back of its first quarter numbers, and Vivek joins in with the fine print and the impact. Tell us, Vivek.
Well, good afternoon. So L&T, what actually transpired in the quarter gone by was that it was expected to be a slightly muted quarter in terms of execution, and largely it's played out that way. So execution was impacted by the ongoing elections, the heat wave, as well as labor shortage, given the fact that most of the laborers had gone back to their villages. Now, despite that, what's actually happened is that execution was strong in the international business, and that was something that helped. The order prospects, however, for this particular quarter that the company guided the street to is slightly soft, down almost 10% on a year-on-year basis. Despite that, the lack of any negative surprises is something that has buoyed the street, and the stock had also underperformed going into the results. Now, talking about the numbers themselves, the revenue was a beat to our own poll. 55,120 crore was where the revenue stood at. Margins at 10.2% and profitability coming in close to the 2,785 crore versus our own poll of 2,870 crore. So a slight miss over there. The order inflows was something that the street is taking quite a bit of heart from, up almost 8.3% on a year-on-year basis, while this tracks slightly lower compared to the management's guidance of 10% order inflow, given the fact that this particular quarter was seen to be marred by elections and ordering activity was slightly soft. The street is taking it quite positively, and the management, more importantly, has not gone ahead and changed any of the guidance, including the order inflow guidance of 10%. Now, talk about the core business margins. Remember, the company has given a margin guidance of 8.25% for FY25. Core business margins came in at 7.6%, expected to be weak in this particular quarter. What is positive is that 20 basis point higher compared on a year-on-year basis. So Q2 and H2 is something that will have to do a lot of heavy lifting in terms of margin recovery. And order prospects, it's now 9.07 trillion versus what was earlier seen at 10.07 trillion. So that is the only blip in an otherwise strong operational performance from L&T this time around.
Well, as they say, no bad news is good news, and that's showing up on the stock price as well. On L&T, almost 3% higher now as we speak. Vivek, thanks a lot for that update. Moving on to weather now, and it's been pelting down here in Mumbai. And not only in Mumbai, heavy rains have lashed parts of Pune and Raigad as well. And the rains have led to traffic jams, waterlogged roads and overflowing lakes. Santya is here to tell us more. Santya, what's the latest update?
Heavy rainfall continues to lash Mumbai and the nearby regions. Right now, we are in Mumbai's Santa Cruz area. We are actually outside Air India Colony, and you can see the waterlogging. You can see how bad the situation is. Similar is the situation in the rest of the low-lying areas of the city, whether it's Science Circle, Gandhi Market, Parel, Hind Mata, Dadar, parts of Govandi, Mankhurd, Borivali Station, parts of Andheri, parts of Santa Cruz. All these areas are witnessing massive waterlogging. That waterlogging, the heavy rainfall, has led to traffic diversion on multiple routes. Heavy traffic started bothering Mumbaikars early in the morning. Other than Mumbai, Navi Mumbai, Thane, Kalyan, Mumra, all these areas, parts of Palghar, are also witnessing heavy rainfall, which has led to massive waterlogging. Only silver lining in this cloud is that the water levels of the lakes which supply drinking water to Mumbai, the levels are now 66.77%, slightly better than last year, but still a long way to go. 3 out of 7 lakes have started overflowing. So one less thing for Mumbaikars to worry about. As I said, the only silver lining in this cloud, heavy rainfall is expected to continue to lash these parts of the Mumbai metropolitan region. Other than that, Pune is witnessing heavy rainfall, which has led to massive waterlogging in multiple parts. And NDRF has deployed 3 teams in the city, and rescue operations are underway. Other than that, NDRF has deployed teams in Mumbai, Thane, parts of Raigad, Pune, Nagpur, all these places. There's a landslide reported in Lavasa city. NDRF has rushed 1 team to that spot as well. 3 to 4 people are feared to be trapped. So rescue operation there also are underway. So as far as the IMD's warning is concerned, the heavy rainfall is likely to continue for another couple of hours at least, and after that the next warning will be issued.
All right, Santya, they're braving the heavy rains and getting us the ground report. Yes, the business districts of Mumbai have been affected by the traffic snarls. So that's also a very big concern coming in. With that, we'll slip into a short breather on Business Lunch, but we'll get you more news and updates on the other side. Don't go anywhere.
25,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees.
Back with us here on Business Lunch, and pull up Ashok Leyland. That stock has seen a very sharp recovery from the lows of the day. Then that's because of the guidance that the company has given in its press release post the results. The industry volumes comparable at levels of the previous peak, but the margin guidance is what the company is given, and that is what has led to this recovery in the stock price as well from the lows of the day. The mid-teens margin guidance is what they are saying. There was margin pressure in the first quarter is what the management said, but they are now guiding for a mid-teens margin, and you can see the stock has now from almost 3% lower, it's now down to less than 1% as we speak, 230 there on Ashok Leyland. But moving on then, in a big setback for the miners, the Supreme Court has rejected the plea by miners and Centre against the levy of cess by the states. Now Ashmit is joining us with more details. Ashmit, what's the latest that you're picking up?
Well, in many respects, this is a landmark judgment. It was pronounced by a 9-judge bench. It's coming after 9,000 days of waiting. This first case was filed way back in 1999. What is the issue at the heart of it all? Well, the core issue that was being argued here before the Apex Court is that can the state governments prescribe a cess by their own legislative competency. Can a state government pass a law saying that, or basis the mineral output, a certain percentage has to be paid in the form of cess or tax? The answer is yes. An affirmative answer coming in from the Apex Court, the Supreme Court saying that yes, indeed, the states do have the legislative competency to go ahead and to pass such laws which provide for paying of cess. This is a burden that will fall on the miners. In terms of the impact, there are four aspects to consider. Number one, the impact on the miners themselves. There was a big question mark over payment of these cess, payment of these levies, of this tax to state governments. That has been answered. So that squarely falls on the shoulders of the miners. The Supreme Court has said that basis the mineral output, the state government can compute a cess that has to be paid by them. So a huge impact as far as miners are concerned. Speaking of the miners, who are the miners that were here before the Apex Court? The likes of Hindalco, Tata Steel, Ambuja Cement, ACC. All the big names were here contesting this state levy. That answer they've met with a disappointing answer from the Apex Court. That burden will now fall on the miners. In terms of the impact also on the state governments, let's bear in mind that mineral-bearing states, the likes of Odisha, Karnataka, Maharashtra, Rajasthan, Jharkhand, Chhattisgarh, MP, these are the larger states which bear these mines. These states are looking at thousands of crores of revenue coming in over the course of a mining lease. That's two. Second, as far as the impact on the centre is concerned, this is a huge hit for the centre as well. The centre, bear in mind, has been arguing before the Apex Court that this power of taxation falls exclusively in the domain of the centre, that the states have no business levying this tax. They've been met with a disappointing answer as well. The centre's petition being disposed of by the Apex Court. So again, a big landmark judgment coming in from the Apex Court in terms of miners, pain coming in for them in the form of additional cess by way of state governments.
Thanks for that, Ashmit. Yes, all those perspectives well taken. But remember that the mineral-rich states, a lot of them are not as economically abundant, and therefore they are taking a share in the pie of the resources that are mined in their own state. With that, we'll slip into a short breather. But up next, we speak to the budget makers themselves as they clarify on the fine print of the new taxation measures announced in the union budget. Stay tuned.
This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes, will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the accelerated irrigation benefit program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and
Welcome back. You're watching Business Lunch, and the numbers trickling in for Canara Bank, and that stock is also seeing some more pressure building in, about 2% down on the back of some of the numbers missing CNBC TV18's poll. So the net interest income at 9,100 odd levels and net profit at 3,900 levels. There's a slight miss on both the fronts compared to CNBC TV18's poll. We'll have to see the asset quality, deposit growth, and all those parameters which have been impacting the banks, and waiting by for more numbers to trickle in. But Canara Bank down about 1.5 to 2%, and it's adjusting to the numbers, and more to see when more numbers and the perspective on these numbers also trickle in. Let's focus on the budget now. Finance Minister Nirmala Sitharaman tabled the first budget of NDA 3.0 on Tuesday. Now, the 25-minute budget speech had the stamp of continuity, constancy, as well as coalition. Now, last evening, the budget makers, the secretaries from North Block, decoded the budget fine print on CNBC TV18, and Finance Secretary TV Somanathan ruled out a rollback of the decision to remove indexation benefits for the real estate in the budget, and said that they were prepared for the blowback. Now, Revenue Secretary Sanjay Malhotra called the new tax structure on property sales fair. Take a listen.
Is there a possibility of a review? Do you take on board
It is not my job to discuss what the minister will say in her response, but I personally am not in favor of a review. I think our view is that investments need to be determined by inherent economic considerations, not by tax arbitrage. For the vast majority of people, including the overwhelming majority of the middle class, I don't think this is a significant issue. And I think for most of them, they will end up preferring the 12.5% without indexation, because it will actually be lower if, in fact, real estate returns are good. If real estate returns are not good, then it might break even, and there may be a few cases where there's a slightly negative impact.
Now, many are saying that with the removal of indexation benefit, people stand to lose, and perhaps there is a need to review the numbers itself.
Absolutely not. I feel, that the people will, the vast majority will actually, lose if we were to go back to the old system. It's not in their interest to go back to, indexation with a higher rate of taxation, which is 20%. So we have done our calculations. If at all, for some who were not paying these taxes, if it is going up to 12.5%, I think it is fair for everyone to pay those kind of taxes.
Now, the union budget allocated around 19,100 crore to the Ministry of New and Renewable Energy to scale up green hydrogen and alternative energy schemes in the country. Now, the MNRE Secretary Bhupinder Singh Bhalla reveals plans have already taken form. Listen into what he had to say.
It's very quite rudimentary. You ask me what the main schemes are, and I'll tell you in PM Suryaghar, this is what I want to do. I want to escalate installations in PM Suryaghar. I want to escalate installations in PM Kusum scheme, which we have now a lot of progress which is happening. More important, GEC, the Green Energy Corridor, we want to close whatever remains for phase 1, but start progressing on phase 2 on a very fast scale. Green hydrogen, a lot of things happening. Green hydrogen production capacity, ammonia bids, aggregation for green hydrogen, for refineries moving on to using green hydrogen. Apart from that, pilots from transport, in the transport sector, in the shipping sector, in the steel sector, all these projects are moving ahead. Of course, and we also have, of course, the R&D project, which we'll be announcing in the next couple of.
Let's cut across to Shireen Bhan, who is in conversation with DEA Secretary Ajay Sheth.
welcome to CNBC TV18 special. The budget verdict continues and we are in conversation with the budget makers themselves. Joining us now on the program is the Economic Affairs Secretary, Mr. Ajay Seth. Mr. Seth, thanks very much for joining us again on CNBC TV18 for a much more detailed conversation than we had on budget day itself. I want to understand from you, sir, to take forward what the FM said in her speech as far as the fiscal consolidation roadmap is concerned and the outlook from here on for the government. And I'm quoting from the speech, the fiscal consolidation path announced by me in 2021 has served our economy very well. From 2026-27 onwards, our endeavour will be to keep the fiscal deficit each year such that the central government debt will be on a declining path as a percentage of GDP. While the fiscal consolidation glide path has been mapped out by the FM, what about the debt side, sir? What's the expectation that we should realistically have in terms of the debt levels that the government wishes to achieve within this period as well?
Okay. See, conventionally, debt management for public debt management has been looked at from the perspective of the flow as a parameter. How much governments should borrow in a particular year. But when we look at the sustainability of debt, what is relevant is the stock of the debt, which has a far more lasting impact because one can adjust the annual accretion to the debt stock. But whatever one has accumulated over the years, that has to be brought to the sustainable level. Keeping that in mind, what Finance Minister has announced that government has delivered and is committed to deliver even next year the glide path from 2021 till the next year. What next? As a forward guidance to the market, an approach has been suggested what government intends to follow from the financial year 26-27. Is saying that if you are looking at bringing the total debt stock to a sustainable level, then the primary or the most relevant parameter itself, let's anchor our efforts to that one itself, which is total debt stock to GDP ratio.
Right.
And every year we try to chip it away from there. And if you recall that pre-pandemic country was, or central government debt was around 48%. This ratio was around 48%. Because of the pandemic, it went up to almost...
Went at about 56.
It went up to 61.
Yeah.
Now we are 56 plus.
Right.
Meaning that over 4 years, we have come down by about 5 percentage point. Moving forward, every year, it has to be reduced so that we reach to a more sustainable.
So what is that quantum that you realistically believe that you will be able to chip away, in your words, every year?
So the policy intent has been initiated by Finance Minister. Now it is for us now to work out the ways how to operationalize this. We have certain ideas how to put it together, but that call has to be done, that what kind of a glide path has to be done over the course of next 1 year.
So what are the options on the table? You said that the work has, obviously some background work has been done and decisions will have to be taken on the route forward. But what are the options on the table?
So the options in the sense that why this shuttle shift has been thought of. And it's not, this is several economists have been talking about it. The public finance people who have worked in that area have been talking about it, not just in India, but even abroad. Is that different economies based on their pace of growth and the structure of the economy have the need for governments to play a particular role, as well as have the absorptive capacity to sustain a particular level of debt. Considering that India has been growing in the last 4 years or 3 years at a good pace, and we have the confidence that even in the future, for foreseeable future, we can maintain that at a higher level. We have both the need and the absorptive capacity for a higher debt. But of course, it has to become a more sustainable. At the moment, 56% plus ratio is certainly an elevated level. It has to be brought down. So keeping that in mind...
What would be a comfortable level? You acknowledge the fact that 56 plus is an elevated level. What would be a comfortable level as far as debt is concerned to your mind?
See, we have a long way to go on that particular one. As I mentioned it, the pre-pandemic, the debt level was 48%. So the first goal would be to reach that level. But that has to be over a period of time. It can't be a sudden one. These are the accumulated debt. But what should be, with what period it has to be achieved that level will have to be, that is a work which we have to do. Look it into the conditions of our economy and to do so. What it gives a flexibility that there can be years wherein there may be a need to calibrate how much government has to do in that particular year. It also gives a scope to the government to follow a counter-cyclical policy in terms of the fiscal support to be provided, rather than getting tied up to a fixed 3% limit.
Okay.
There's a purpose.
A couple of factors that you will now also need to consider as we get to that 2026-2027 roadmap. The Finance Commission recommendations, which will have to factor in the kind of devolution that will have to be granted as far as states are concerned. And on the GST liabilities, sir, do you believe that there is any possibility or any chance of being able to advance the payment as far as or extinguishing the GST liabilities to states is concerned?
See, as far as the two factors, I'm glad that you brought up that aspect. Yes, from the financial year 26-27 will be the first year when the recommendations of the 16th Finance Commission would be applicable. Obviously, that will be an important factor to decide what kind of a glide path would be possible. But on the issue of a GST compensation, our assessment is that it will take about 12 months to take care of the loans which Government of India had taken to compensate the states for the period when the GST growth rate was fairly low and the 14% was promised to them.
So, as and when the liabilities are extinguished, what then, sir, if we continue to see a shortfall at the state end on account of GST, is there a possibility that this compensation cess in another name will continue to be imposed, or is there a possibility even as far as a higher rate is concerned on that?
See, as far as what the sort of a pact was made in 2017, that Government of India assured that 14% growth will be will be assured for the next 5 years, and to the extent there is a shortfall in any state, there would be a state will be compensated, and that commitment has been completed. Now, what happens to the compensation cess, say next year, when this liability has been completed, has been taken care, is for GST Council to decide. Government of India may have a particular view on that, but it's the council which will take the decision.
What is the Government of India's view on that, sir?
That will be discussed in the GST Council rather than in a press interview.
Okay, let me talk about some of the other factors that the Finance Minister spoke of, or some of the policies that the Finance Minister spoke of, which are really work in progress. And let me start by talking to you about the financial sector reforms. Yesterday, the Finance Secretary said that this is not going to be something that's going to be addressed in the next 6 months or even perhaps the next 1 year. Efforts will be made to start the consultation process, but it's not as if we should expect an announcement on this front in the next budget. Can you tell us what the scope will be, what the ambit is as far as this financial sector, overhaul, reform, roadmap is concerned? What is the thrust area? What will be prioritized? What is the thinking at this point in time?
Okay. Look at that in what context Finance Minister made that announcement. She was talking about next generation reforms, and next generation reforms in 4 areas. 1, 3 factors of production: land, labor, and capital. And if you notice, for a land sector reform, or land as a factor of production, there are very specific ideas are there, specific actions have been identified. There are few elements of labor related services, and then there's a fairly decent chunk on the financial sector. Obviously, when country at the moment is about 335 lakh crore of our GDP size, and we say that over next 20 years, 25 years will become 8 times the size, and every year that kind of a growth is happening. Financial sector has to become a much larger one, and Finance Minister in the interim budget itself has said that we will prepare the financial sector in terms of the capacity, size, and the skills. Now, keeping that in mind, what is the vision? Not just the vision, but what is the strategy to reach there? And that will guide the work of the government, that will guide the work of the regulator, that will guide work of the market participants as to which direction the financial sector to serve the real economy. Now, that is a kind of a fundamental work which we propose to initiate now, and complete it in foreseeable future.
And I understand that there is no timeline that's been put in place by when you expect to complete this. But you were talking about the financial sector. Let's talk about banks in particular. And the aspect that's been brought to the table several times previously is that we need not just world-class banks, but we also need world-size banks. In that context, what is the thinking? We've seen one spate of consolidation as far as PSBs are concerned, and then nothing. Nothing has moved as far as privatization goes. What do you believe is the future as far as public sector banks are concerned? What is the thinking at this point in time that the government has with regards to PSBs specifically and their need to service a much larger economy?
See, for some of these items, one cannot force the pace. It has to be that whatever has been done in the past, it has to be consolidated, and thereafter the next set of consolidation will have to come in. That conversation continuously happens between the government as government as a policy maker, as well as the government as owner of the public sector banks, as well as with the RBI as a banking sector regulator, and the decisions get taken at appropriate point of time. So we can't set a timeline as to when the next set of consolidation will happen. At the moment, the pace of Indian banks becoming bigger is moving pretty well. And if you look at what is the size of SBI, it is about 20% of our GDP. Their balance sheet size is about 20% of the GDP. Of course, these are the two different ones, but it is a good metric to follow. That what is the largest bank in the country? What is the balance sheet size?
So do you believe that there is a need to look at the possibility of consolidation, or leave things as be and let market forces determine?
See, some of these ideas, what you are asking the question, these are the questions one has to, precisely the kind of a question one has to, will be grappling with those issues.
In the financial sector
strategy
reforms.
part. So one is a vision part, like what you initiated. India should have not just large bank proportional to Indian economy, but with reference to the global economy, we should have a large bank. Now that's a vision. But then what is a strategy to reach there? And what kind of a time frame one may have in mind? Those kind of issues which this paper is expected to bring out.
Okay, speaking of work in progress, the energy transition roadmap, also something that the finance minister spoke of. And again, specifics are yet to be worked out, but give us an indication of where the thinking is and what the next steps are expected to be on that front.
Okay. Now, that is again, I'll call it as a second piece where there's a continuity from, or there's an anchor for that particular one, was done in the interim budget itself. As part of the strategy for Amrit Kal, Finance Minister talked about that one of the elements of the strategy was ensuring energy at affordability, accessibility, and availability. All three elements have to be there. In Indian context, we need to grow. Per capita consumption of energy is low. We can't grow and we can't become a higher income country without increasing our energy consumption. At the same time, we have to become a lot more efficient than what we are. Keeping that in mind, that our purchasing power, which say about $2,007 per capita income versus what it may be, say, in Europe and others, advanced countries, of $50,000 per capita. The solutions for an energy transition for India have to be entirely or quite different than what it can be for an advanced economy. So in that path, that what kind of a transition pathway we adopt, so that there are no constraints to growth. At the same time, the climate action, ambition and the need and the responsibility of the country can also be met. Now, we are doing within Department of Economic Affairs along with Asian Development Bank, trying to get that a structured study that where lies the trade-off, what can be a more sustainable one which we can help us keeping our growth rate high, which implies that our energy consumption will grow up. At the same time, we are towards a path of efficient energy users. At the same time, Niti Aayog is doing a lot more comprehensive work. So the idea is that in about 6 months' time or before the next budget, come out with a pathway, that the second policy paper on the energy transition pathway for the country.
So this is likely to be completed within 6 months, of earlier than the financial sector vision and execution roadmap that you spoke of. So this could perhaps find its way into the next budget?
Certainly, that is an idea, that each of these works which will be, which we have done preliminary work and we would be starting it, it does require fair amount of consultation with the stakeholders and coming out. The idea is to keep on informing the policy making. Like this, even this budget has a fairly strong package on what we need to reach to the energy security. There are specific 5 items have been indicated there, but that's not the end of the requirement. The requirement is a lot larger. So as and when, or as we are completing our policy work, or this conceptual work is getting, it keeps on informing the policy. It doesn't mean that it has to become 100% complete, only then it is available, relevant for the policy.
Well, speaking of
Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths.
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's a day of recovery, but a lot of stock-specific action that we are tracking. Epigral, that's the stock on our radar, is doing well in trade after reporting a strong set of Q1 numbers. Revenue jumped by 43%, margins expanded as well. To discuss this and more, we have Maulik Patel, the chairman and MD, Epigral, joining us now. Maulik, good afternoon. Thank you so much for joining us. Well, you know, you've indicated that a lot of it was also led by newer capacities coming on stream, better volumes. So I wanted to understand how much of this growth can we cater to the growth that you've seen because of additional capacities? How much of it was because of original capacities? And are you seeing that improvement in demand and pricing as well on a quarter-on-quarter and on a YOY basis?
Yeah, so last year was very down for the chemical industry. So we have seen many changes is happening. Specifically, globally the situation is improving, but domestically all the chemical consumption is growing much faster than others. Like what we have expanded our capacity in terms of the CPVC and the CPVC compound and the epichlorohydrin capacity which we have started last year. That is the local consumption has increased, and because of that, I think our revenue is also increasing, and the volume growth which we have done this year on YOY basis 29% and quarter-on-quarter basis 14%. And we expect this year the volume growth we are able to maintain 15 to 20% because of the year-on-year expansion which we are doing continuously.
Maulik, so 15% volume growth for FY25. Along with that, can you also help us with the guidance for for top line EBITDA margins as well as the bottom line?
Yeah, top line and EBITDA, it's difficult to give a guidance, but I think current situation, it is not going to be major change in terms of the crude oil prices and the raw material and the energy situations, except the logistic challenges which the country is facing in last 3-4 months. It is going to be easy in the coming quarters. That's what we are expecting, and it is not going to be major effect in terms of the raw material prices also. So 15-20%, I think continuously we are going to grow in terms of the volume, and the revenue probably we will achieve probably 2,400 to 2,500 CR in end of this financial year.
Okay, so, I wanted to understand the pricing scenario. You did say the demand is improving. Yesterday, SRF on its conference call indicated that pricing recovery is still far away. There's no clarity on that. Is this something that is happening with your industry as well? And in that case, will this growth be largely led by volumes this year?
Yes, that is right. The price recovery, I think it will take time, and I think the 2023 financial year was is a bit low for the chemical industry. But I think the price if you compare only the 2023, yeah, it is going to improve a bit going forward. Looking at the domestic consumption and the global consumption is going to improve, and export also volume will increase for the chemical industry. So we are expecting the price will increase, but not to the tune of 2022 and 2021 level.
Okay. Maulik, just give us a sense of this new value chain facility that you have for chlorotoluene. What will volume growth look like from there in Q2, and what is the target that you've set for FY25?
Yeah. So the major project which we are going to commission in the coming quarters is a chlorotoluene as a part of the specialty and the derivative segment. And the volume will realize in terms of the revenue from Q4 onwards, because these are the specialty chemicals. So once we commission, I think it will take a couple of months for the approval of the customers. And I think Q4 and the next year actual revenue will be contributed from the chlorotoluene business.
So, is the peak capex for the company over now, Maulik? Because you've done a lot of commissioning already. Now this chlorotoluene plant will be commissioned. And what does it do to your debt? The net debt to equity is reduced, but what's the absolute debt number that you're sitting on?
So net debt is our debt to EBITDA. If you consider the past trailing 12 months is 1.6, and in absolute terms it is including working capital, it is around 925 crore. And going forward also we are going to strengthen, and our capex is going to be more towards the domestic consumption and the import substitute, and we are going to continue our capex in the future also. So in absolute terms, I don't think so we are going to increase much difference in terms of the debt, but overall balance sheet and the ratios will improve as our revenue will grow from the new capex going forward.
Okay. Thank you so much for that, Maulik. Today we have, that's all the time we have, to speak to you today, but we'll get you once again, once some of the new capacity that you spoke about come on stream. Let's now slip into a short break. On the other side, we will connect with Amit Jigran, the MD and CEO of SBI Life Insurance, to discuss their Q1 performance.
Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
We are very close to the due date of filing income tax returns, and if you're not done with it yet, let's tell you all that you need to know at the last minute for filing your return. Income tax return documents differ as per the earning sources of the tax filer, but certain documents are mandatory for every taxpayer irrespective of the income source. So let's talk about them first. PAN and Aadhaar number are the basics, of course, that is something you can't do without. But the other ones, Form 26AS, this gives you details of all the details of the taxes paid during a financial year on any transaction. This would include both TDS and TCS deducted. Second is the Annual Information Statement, or the AIS. This is more detailed version of 26AS and gives you transaction-wise details and also includes details of interest from fixed deposits and savings bank account as well. Also details of any shares sold. How do you get these two documents? Log into your account on Income Tax website and then go to the e-file tab to view Form 26AS and Services tab to get your AIS. Now for the other income, that is capital gains, you will need to pay taxes. You can get the details of the capital gains that you have earned on sale of mutual funds or shares from your fund house or your stockbroker. This will be available online in your stockbroking account. This will give you details of all the share transactions you've done in the financial year with the amount of capital gains. Similarly, details of dividend income is also important to be considered while filing ITR, and this can be taken from the broker or demat account summary. Also, while AIS gives details of all the interest income that you have earned, always best to check it with the interest certificate you receive from banks. Again, these can be found in your net banking. This would have details of interest paid on home loans as well. Important if you have one, because that can be used to claim deduction in the ITR. This would also mean it's important to keep your home loan statement with you as well at the time of filing a tax return if you have one. Of course, for salaried individuals, Form 16 is another very important document to keep. It is for salaried individuals with details of all TDS deductions done by the employer. Disclosure of all active bank accounts are mandatory in the ITR. Bank account details like your bank name, account number, IFSC and number of accounts you hold must be quoted in the income tax return. Also, one account shall be selected as primary to assist the income tax department in refunding your tax refund by electronic transfer to such account. Also,
Welcome back to Midcap Radar. Let's now shift our focus to SBI Life, which recently reported its Q1 numbers. New business premium surged 13% on a year-on-year basis, while total AP and retail AP grew over 20%. My colleague Yesh Jain spoke to Amit Jigran, the MD and CEO at SBI Life Insurance, and began by asking him about his AP outlook for FY25. Let's listen in.
first quarter growth for the entire insurance industry, as the numbers are coming out, has been pretty good. And on the same lines, at SBI Life also, we have a pretty decent quarter with 20% AP growth, as you said. During the quarter, our agency had a wonderful growth, and that is the area that we are focusing upon in this financial year. And the agency growth was plus 40%, 46% to be exact. So this year we have taken this target that we will tap the opportunities that are available in the agency segment by opening more number of branches, employing more agents, improving the agent productivity, and in the remaining 3 quarters also, with the seasonality that you have seen in SBI Life in the past years, we are sure that the kind of growth that we provided guidance for after the last year's result and the first quarter growth is expected to continue.
Okay, so about 20% growth on the AP thereabouts for FY25. Yeah. I want to speak to you a little about the value of new business. That, of course, sort of came down as against the street estimates. That's because the margins also receded a little. What I want to understand from you, for the year, do you expect, if let's say the AP you expect for FY25 to grow at 20%, what kind of growth do you expect in terms of your value of new business? Since you've already said that your margins are expected to trend upwards from here, then in that situation, AP growing at 20%, what could be the growth in VNB?
See, you are aware that VNB and VNB margin are a play of the product mix. At SBI Life and in the entire industry, you would have seen that ULIPs are flavor of the market, and that is natural also because the customers, when they are seeing very good returns on the equity side, they are naturally tending to buy more of the ULIPs. Correct. That is what the story was in the SBI Life also, and our ULIP sales were a little higher. That affected the VNB margin a bit. The other side was that the yields are coming down in the government bond market also, and we did not reprice our product in the last quarter depending on the yield that we are getting from. So that also affected the overall margin to a certain extent.
Correct.
Going forward, as we are focusing on the protection segment, and we are launching some new products also in protection, and the repricing of the non-par products, we are sure that the guidance that we earlier provided for the margin to be range bound around 28, we are pretty sure that we will be sticking to.
Well, a very interesting conversation with SBI Life Insurance. The stock doing quite well after it reported a strong set of Q1 results. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner, when we return.
Made to notified organizations, relief funds, charitable organizations that will be eligible for deduction under ATG. So keep that handy as well. Always good to file your return in time, but if you're late, this basic checklist could help you.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to to AI/ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to
Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and this is just 2 days after the budget when we've seen so many changes in mutual fund taxation rules as well, be it the long-term capital gains that has been hiked to 12.5%, the limit being hiked to 1.25 lakh. The short-term capital gains, they have been increased to 20%. So there's a lot more. The specified mutual fund definition has been changed. So let's try and understand what would these tax changes and the definition changes mean for your investments. We have joining us today Mahindra Jaju, the Chief Investment Officer, Fixed Income at Mirae Asset Investment Managers, and Ashish Shankar, Managing Director and Chief Executive Officer at Motilal Oswal Private Wealth. Gentlemen, good afternoon. Thank you so much for joining us. And there have been so many amendments. It's very difficult to actually boil it down comprehensively. So we have both of you on the show today. Ashish, let me start with you. First is, of course, that change in the long-term capital gains rate changed from 10% to 12.5%. We've seen a big surge in SIPs, investment in equity funds. Will this increase prove detrimental for investors? What has the general viewpoint be here?
Hi, Sonal. Happy to speak to your viewers. So look, the hike in capital gains is a small one. We've gone from 10 to 12.5. Given the potential returns from equities, I guess it will not matter much, because if you look at some of the other asset classes, the differential return is still pretty significant in terms of the rate of compounding that we have seen in equities over the longer term. And even in the future, I do believe, given the kind of growth path that is ahead of us, I think investors will take this tax hike in their stride. I don't see any reason for, let's say, lack of flows or lack of allocations just because of the tax change that has happened.
Okay, all right. So that's good to know. It doesn't really change how the investors, or at least the long-term investors, go about investing in mutual funds. Mahindra, welcome to the show. I wanted to understand, because now the definition of specified mutual funds, that has been changed. Wanted to understand, what does it indicate? How would that change things for the industry and the investors? And is this something industry wanted for a long period of time? Is this something that they have liked as a change?
I mean, as far as the specified mutual funds are concerned, as far as the debt side is concerned, there is no change, because the debt funds were anyway being taxed at the marginal rate. The investments made on or before 1st April 23, those will continue to be treated as the long-term capital assets, and therefore, while you will not have the indexation benefit, you will still have the long-term tax rate applicable. Insofar as the definition of the specified mutual fund is concerned, it has been simplified, and now the definition says that the mutual funds which have 65% or more invested in debt and money market instruments. So therefore, you have the entire category of the gold ETFs, etc., which have now been taken out. So to that extent, there is a refinement. But as far as I understand, as far as the debt funds are concerned, there isn't anything incrementally changing in terms of the taxation treatment, and therefore it remains the status quo.
Oh, okay. Because the indication was that there have been some changes in the debt taxation bit as well. But I'll come to you in just a bit on that, Mahendra. Let me come to you, Ashish. Is this something that the industry is liking, the change in the definition of specified mutual funds?
Yeah, so Sonal, whilst the increase in the rate of capital gains is a slight negative, however, I think I welcome the move to simplify the tax slabs. So now investors have to just remember two things, right? There is a 12-month capital gains incidence and there is a 24-month capital gains incidence. So as Jaju said, now the definition of debt funds is very clear, right? Any fund which is investing more than 65% in debt instruments is classified as a debt fund, which will go under marginal taxation or slab rate. All other funds will have a 2-year window. That is, when I say other funds, I'm talking about non-equity. We'll have a 2-year window to get the long-term capital gains benefit. And the slab is basically now got homogenized to 12.5%. So actually, from an asset allocation perspective, it is a very positive move because now gold funds, the international fund of funds, the hybrid funds, depending on how much they allocate into equity and non-equity, they will be subject to long-term capital gains after 24 months, and they will come down to 12.5%. So actually, from an asset allocation point of view, this is a very, very welcome change, and it becomes simpler. Of course, the only change is for earlier investors, right? People who invested before debt funds became fully taxable. Now, whenever they redeem after 2 years of their original investment date, they will now be taxed at 12.5%. The earlier understanding was they would have got indexation and taxed at 20%. So that's a change for the old investors.
Okay, all right. That is what, yes, exactly. That's what I wanted to understand. So if you've invested before 1st April 2023 and redeemed on or after 23rd July 2024, the LTCG will be at the rate of 12.5%. Is my understanding correct?
Absolutely.
Okay. All right. Gentlemen, we have a lot lined up on the show for you and we need to ask you a lot more questions, but we have to slip into a quick commercial break. On the other side, we'll continue our discussion with Mahendra Jaju and Ashish Shankar on mutual fund taxation in the budget. Stay tuned.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC testing.
Welcome back. You're still tuned into MF Corner. We still have with us Mahendra Jaju of Mere Asset Management and Ashish Shankar of Motilal Oswal Private Wealth. Mahendra, let me come to you because, debt side, it has seen those changes last year when the indexation benefit was removed. And now with the changes in the definition of specified mutual funds and what we just discussed on investments redeemed after 23rd July 2024. So those are the things which are confusing the investors a little bit. So just wanted clarity on that. How does it now compare with, say, a fixed deposit? Is it still the level playing field? How can an investor compare the FD taxation versus a debt mutual fund taxation?
Yeah, so in terms of the applicable tax rate, which is the same for the FD and for the debt mutual funds, which is the MMR, but there are finer aspects. For example, if someone is investing in FD, then he will have to pay tax on accrual basis on the deposit's interest, irrespective of whether the deposit is matured or not. But the big difference with and the huge advantage which the debt mutual funds still have compared to the FDs is that if someone is a long-term investor, you will not pay any tax in the debt mutual fund until you redeem. And when you redeem, you can time in terms of your tax position depending on year to year. So one big difference is that the tax treatment in case of debt mutual fund is back-ended at the time of redemption. So if somebody invests for 5 years, he gets a 5-year compounding advantage over and above the deferral of the tax. In FD, every quarter or at least yearly you will have to pay interest. The second difference between FD and the debt mutual funds is that FD will give him a fixed rate of return, which is determined by the bank, whereas the debt mutual funds provide return which are linked to the market. Now, when we talk about inflation hedging, the simplest concept where this inflation hedging applies is when you invest in an asset which gives you market related returns. So of all the debt options which are available today, debt mutual funds are the only option which gives the investor a market related return and gives him an array of choice in terms of the short term funds, long term funds, duration funds, credit funds, etc. So I think while on the front of the taxation, just the rate is same, but as I said, mutual funds have an advantage. But there are many more other finer aspects where the debt mutual funds, in my view, score highly over the bank fixed deposits or other comparable debt options. So I think so far the investing in debt mutual fund was largely guided by the tax advantage, but I think going forward, the investors will also begin to appreciate the other advantages, and therefore I think the debt mutual funds will come up on their own without the crutches of the tax advantage.
Okay, all right. That is very helpful, Mahendra, because as I said, it was the before 1st April 2023, the redemption after 23rd July 2024, which was a little confusing. And how does it compare with fixed deposits right now? Ashish, let me come to you. Hybrid mutual funds, multi-asset allocation funds, they saw a lot of traction post the debt taxation changes, and generally because that provides a larger asset class in terms of investments. Is there anything that changes now for the investors in this category?
So, Sonal, at the margin, it becomes even more attractive because the definition is very clear now. So you could have less than 65% in debt and have a hybrid fund and avail of the 12.5% taxation after 2 years. So actually, these funds become even more attractive. I believe that a lot of investors will move some part of their debt allocations to multi-asset kind of funds, because they can give you an inflation hedge, because they can have allocation to gold, they can have some allocation to equity, and still avail long-term capital gains after 2 years. So these funds will become very pivotal in creating a portfolio. As far as equity is concerned, I think it continues to be an attractive asset class because of the compounding it generates. You can also now have standalone gold funds. Earlier, gold funds, the understanding was that it will be taxed at MMR. Now, with this change in the specified mutual fund definition, gold funds will also be taxed at long-term capital gains after 2 years at 12.5%. So earlier, sovereign gold bond was the only instrument which used to give you a tax benefit. Now you can allocate that money in gold funds as well. And for new investors coming in, the price of gold is lower, because what they've also done is they've reduced the excise duty from 18 to 9, although there is a one-time hit for existing investors. But for investors who come in now, there is a benefit.
Oh, okay. There was a separate question on gold altogether for me, for you, Ashish, which I would have asked you after this segment. But we'll, of course, take a deep dive into that in just a bit. Mahendra, coming in on to you. For specified mutual funds, was this an ask for a long time? And is there something which hasn't come in the budget, which the industry was expecting from the debt side at least?
So industry was hoping that there is some sort of, advantage or, some sort of headroom created for the, debt funds. As Ashish just now mentioned, that now even the gold fund or other funds with different combinations other than debt will have the long-term capital gain advantage. So in the economic survey, there was a detailed description on how the quick financialization of the savings can lead to higher risk, etc. Especially after the economic survey, there was some hope that some sort of preference will be given to debt funds to enable the platform for the huge investments that is required in the infrastructure sector. But at this point, there does not seem to be any reprieve for the debt fund investor. However, my view at the same time also is that this is just one of the taxation angle. But then even when the interest rates were negative, the fixed deposits or the deposit base of the banks continued to grow. So I believe that there is a separate class of investors who look at pure debt option within their portfolio. Therefore, the debt has to compete not with the other sub-segments of the mutual fund industry, which is the equity fund or hybrid funds, but the debt has to create its space out of those people who are keeping 92% of the financial savings of the country into pure debt products. So I think that is where the growth for the debt segment has to come, not by trying to prove or suggest that debt returns or debt funds by themselves can be superior to the same competing products within the mutual fund space. So that's where I think the industry will now have to focus and create headroom for growth on the debt side.
Okay, we get that point. Gentlemen, we have to slip into another quick commercial break. On the other side, we have a lot more questions with you, so stay tuned. We'll continue our discussion with Mahendra Jaju and Ashish Shankar. Stay tuned.
Embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive.
Welcome back. You're still tuned into MF Corner. We're discussing everything that would impact you because of the changes in budget this time around. And we have our experts back with us, Mahendra Jaju and Ashish Shankar, on the new mutual fund taxation rules. Ashish, coming to you, because we've discussed about gold ETFs and gold funds. I just wanted to ask you in greater detail here, how would things change for gold ETFs, international funds, fund of funds, because of the change in specified mutual funds? And now are these gold funds at par with, say, sovereign gold bonds here?
Yeah, so let me just simplify this for your viewers, Sonal. Now there are 3 categories of funds, right? There are funds which invest more than 65% in equities. So they get classified as equity funds. So after a year, you have 12.5% taxation. And before a year, you are taxed at 20%, which is short-term capital gains. The second type of fund are funds which are investing less than 65 in debt, right? So those become less than 65% in debt and not more than 65% in equities. Those become hybrid funds. Now those you have to wait for 2 years for long-term capital gains benefit, and the long-term capital gains benefit is the same as equity, which is 2.5%, and before that it is marginal rate. So what happens is, for gold funds, earlier they were being taxed at MMR. after the tax changes that they did in 2023. So as a result, the sovereign gold bond product became very, very attractive because there is no taxation if you hold till maturity. Only the interest portion is taxed there. Now, with this change, you can invest in a gold fund and you are eligible for a long-term capital gain benefit after 2 years. And that taxation is at 12.5%. So it's easier for a person to asset allocate. As far as comparison to sovereign gold bond is concerned, sovereign gold bond from a taxation and effective return point of view will still be more attractive. But remember that sovereign gold bonds have a lock-in, whereas a gold fund doesn't have any lock-in. You can redeem the gold fund whenever you want, right? And if you wait for more than 2 years, then it becomes taxable at the long-term rate of 12.5%. Hope that part is clear. Coming to FOFs and international funds, because they are again classified as non-debt and non-equity, non-Indian equity, they will also be eligible for long-term capital gains benefit after 2 years. So today, if somebody has to create a portfolio of, let's say, some allocation to international equity, some allocation to gold, some allocation to Indian equity, and to debt, it is much simpler to do that without worrying about the detrimental tax effect. So actually, net, it is pretty good. The only challenge, Sonal, there is that the international funds, we still don't have limits. Although I think there are some funds which do accept allocations through SIPs. So one can still build a portfolio there. So those are some of the changes. Hope they're clear.
They absolutely are, Ashish. Thank you so much for explaining that in that detail. Mahendra, while we've been talking about all these tax changes, the holding period changes, one of the categories that is gaining a lot of traction is REITs. The holding period for long-term capital gains is reduced here from 36 to 12 months. And with the property tax changes as well, do you think this category becomes very attractive? Is this something that fund managers are looking at?
Yes, I think most people are now looking at it very seriously because this is again going to be the next segment of explosive growth, because the Indians' love for gold and property is known to everyone. And there are a lot of challenges in investing in the real estate sector. And the RERA across India has addressed a number of those issues. So real estate market has become very, very well streamlined now to a large extent. So the remaining challenge in the real estate market for a retail investor is the large ticket size. So today the equity investment has been absolutely brought down to incremental of maybe 500 rupees, and people, retail investors in remote villages are also participating in the wealth creation. Same, I think, is going to be replicated on the REIT side, because there are two handicaps of investing in real estate for the retail investor. One I already mentioned is the large ticket size. And the second is the ability to do the due diligence of buying the property. So when it comes in the REITs form, there are experts and professionals who do the due diligence in terms of the legality of the documents of possession and of the, construction quality and so on. So therefore, the retail investor can, invest in real estate with the confidence that he's getting into the right property at right valuation. And then the third aspect of real estate is obviously the ongoing facility management, which again in this format is done by. So REITs are very popular in overseas markets, and I believe that the good platform has been led by bringing in parity with the taxation of the real estate for that segment to now catch up on the growth.
Okay, all right. That's very helpful, Mahendra. Ashish, I would have liked your views as well. We just have 30 seconds left. If you can quickly tell us your views on REITs in general.
I think positive, Sonal, because again, as I said, it's very easy now for an asset allocator to diversify a client portfolio across asset classes, and REITs will become a mainstay in customer portfolios, and it'll give investors a good way to participate in commercial real estate specifically with some yield benefit in their hands. And now it's 12 months, so it's much simpler to rebalance as well.
And now we're talking about maybe a regime where interest rates will go down. So let's see how this category behaves as well. But Mahendra and Ashish, it was such a pleasure to have both of you on the show today to demystify the changes that we saw in the budget with respect to mutual funds. So many amendments. So we need experts like you to break it down for us as well. Thanks a lot for tuning in. But with that, we'll take your leave on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.
Decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on the Lal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
The US markets ended with deep cuts, and that is something which we are seeing in the Asian markets as well.
It was an operational weak quarter for Axis Bank.
7 out of 10 intraday cash market traders incurred losses.
Ford came out with earnings. I mean, that's an indicator of sort of the manufacturing real economy.
Bulls will want to fight back and get it closer to around the 20-day image. So that's important.
L&T, no negative surprises. That's the good part.
SBI Life, it was a mixed bag.
150 points lower, 24,253.
Most important thing that I wanted from the budget was it does no harm.
Fight for deposits is quite intense. That is an unarguable fact.
Nifty bank goods recovered a bit from the lows.
It's a top-down miss for Nestle. In fact, it's a weak set of numbers.
Can a cess on mineral output be levied by the state government?
We expect significant volumes going forward to come from two-wheeler segment.
To compensate the states for the period when the GST growth rate was fairly low.
Well, that's a day so far, and it's a very, very good-looking screen. You know, what can I say? Once again, day after day, event after event, demonstration of resilience. This is Closing Bell. We're coming to you live from the CNBCTV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema, Nigel, and Surabhi is going to be with us in just a bit as well. Guys, hi, good afternoon.
Hi, afternoon. Absolutely remarkable, right? The Nifty opened at levels of 24,200. The picture across Asia was deep in the red. Hang Seng is closing with a cut of more than 3%. Hang Seng, the Korean markets, Kospi down 1.7%. Europe too is bleeding right now, 1.5% gone on the CAC and the DAX. And here we have it. The Nifty is on the verge of breaking into the green, just down 1 point right now. The Sensex is down 0.05%. The mid-cap index is in the red, but it spent some part of today's trading session in the green too.
You know, in the morning I was worried I picked the wrong shirt color. So I think now inadvertently it's the right shirt color. You know, what can you say? So it's just a couple of points. Nifty is absolutely flat, and this is in the face of a 4% cut on the Nasdaq, right? 4% cut on the Nasdaq, and you've got the market which is actually in the green, almost in the green. Most of Europe is lower, not dramatic, but 0.75%, 1%. Asia largely all ended lower, I think, except Taiwan. All other markets were down. And you've got this reaction. So once again, I think the flows will bear it out later today in terms of what institutions have done and where this perhaps buying has come through. US macro backdrop is solid. I mean, if you look at payrolls and Fed trajectory, all of that stuff is okay. At the margin, stronger dollar is a bit of a risk. That's one of the Trump ways markets expresses the so-called Trump trades, a stronger dollar. But the issue is really tech earnings, and earnings not just in the US but here also are is essentially the issue. And the bar is high for earnings to really surprise after stocks have done so well. And of course, there is a bit of extended positioning as well. I looked at mid caps and small caps; they're absolutely flat. A little lower today, but flattish is what we have on the screen right now. Lots of single stock action, and that's how we'll spend our time over the next 60 minutes here. Surabhi is with us as well. Surabhi.
Guys, what should I say? This is a market that cannot fall, it cannot fail. Typical wisdom, traditional wisdom tells us that's not how it works, but then our market is a market that's turning to all kinds of traditional wisdom on its head, right? Given the kind of global cues that you guys discussed. This is absolutely phenomenal.
Yeah, no, I was going to say that not traditional wisdom, all wisdom.
All wisdom, yeah. It's just all wisdom on its head. I mean, it is a buy on every dip market. You get a little worried, you get a little scared, but maybe that's just, you know, old people thinking and talking. It is what it is, and for the time being, I mean, every single dip in this market is getting bought, irrespective of the reason behind the dip. It doesn't matter. There are buyers and more buyers. I just want to sort of pull up some of the result reactions today. By the way, we've not had too many hot reactions. Ashok Leyland came, numbers were, well, subpar, just below estimates. Then you had Nestle. Nestle's volume is nothing much to write home about, that 1% volume increase. You had Canara Bank, which was actually better of the lot. We'll get more as we go along. But the fact is that you don't have too many earnings which are really putting the screen on fire. Either there's some additional buying on a Petronet LNG, for instance. I mean, brokerages have been optimistic. Banks continue to be a big watch point, not taking our eye off on away from Axis Bank. It's still down 6%. By the way, when we say buyers are coming in, they're not coming in on the banks. That sector seems to be sort of, dealing with its own set of issues and problems. But for what it's worth, the Nifty is absolutely flat, rock steady and solid. You know, Nigel, I'll tell people, in fact, they can probably go on social media and check out this picture. Anuj shared a picture with me. 7 years ago, Anuj and I were at the NSE because that's the first time the Nifty had hit 10,000. Now we're at 24,000. It's a very, very different market, I think.
Well, indeed. Those are the days, right? 10, 15,000 odd. We're 25,000 and on our way higher. So good times for our markets. And as you all said, today, the markets had plenty of negatives that it was faced with, but the buy on dips really continued. And just one couple of points, as we had that drop that was coming in there, I made this point earlier today, the 24,200 mark is extremely crucial today. We went within 10 points of that, and from there, we've seen a bit of a bounce. So the reference point on the downside becomes the 24,200, and now we're trading above the 20-day MA. On a closing basis, you want to end higher than the 20-day MA. That's on the Nifty. On the Nifty Bank, earlier today we said the 50,500, 50,600 mark is extremely crucial. The 50-day MA is around there. We've gone to them, and in fact, we have bounced towards that from that level. Now, important to build on from here because the Nifty Bank's bounce hasn't been as much as the Nifty. So for the final hour of trade, given that we have the monthly expiry that will play out, keep an eye out on the Nifty Bank. If it can cut its losses, we'll see a further bounce from here. Otherwise, if the Nifty Bank wants to go ahead and revisit the 50-day MA, we could see some bit of a slide from these levels. The question is, how do you position yourself in the final 60 minutes of trade? Ashish Kayal joins us to help us out with that. Hi, Ashish. Well, buy the dip is working till now, but do you think, we still have some unfinished business on the downside, or do you think we're up and away from here as well?
Hi, afternoon to you and all the viewers. If you look at Nifty, there has been absolutely resilient move. We can clearly see we moved down on the budget day, but we recovered back sharply. We moved down, gap down today also, recovered back sharply from there, filled the gap. So overall, the tone looks to be positive. 24,200 continues to remain a strong support. And now if we manage to cross back about 24,430, there can be some kind of a short covering from the sellers at 24,400. Those call sellers can try and cover their positions, taking the index back toward that 24,480, 500 mark. So the overall tone remains bullish. I think over here, any dip if you can get, again, use that as an opportunity to buy, aiming for the target of 24,480 on the upside. And very interestingly, one point is that post 4th of June election time, if you check on the charts, Nifty has not given a close below the prior day's low since 4th of June. That happened only once, and that was an outside candle, which does not change the trend. That's a very classic way of seeing that the momentum is still intact. There is still not a lower high and lower low, and we have not closed below prior day's low, even now after all the events that has happened. So the tone is buy on dips, aiming for 24,480 and possibly higher back towards that 24,700 mark is what I'm thinking.
Okay, is there any stock-specific, any stock-specific action that you would recommend for trade?
Yes, if you look at Sun Pharma, I think the stock has given a very strong breakout in today's session, and it has formed a rounding bottom kind of a pattern showing good volumes. The sector is also supporting. So long positions can be created in Sun Pharma. Maintaining a stop loss of 1605, we can expect a target of 1800. And the next stock on the buyer side is IGL Life, a very classic higher low pattern. Simple Dow theory suggests the trend is bullish, taking good support at the 20 days average, bouncing back from there again. And we can expect it to reach towards the target of 1300, maintain a stop loss of 1160 on the downside.
Pharma has actually moved up to the day's high. Even the Nifty Pharma index is up close to about 0.7%, and insurance has turned out to be the sector of the week. SBI Life, 3% up today. This week, it's seen a 13.5% gain. And the other one is HDFC Life, 15% in the last 4 trading days. But on the way down, it's the banks playing spoilsport, particularly Axis Bank. But Federal Bank is bucking the trend and is up 1.5%. Abhishek is joining in with some brokerage calls. Abhishek.
Well, to begin with, take a look at the comparison between the two. Now, Axis Bank is finding it tough to grow their deposits. Deposits declined by 0.6% quarter on quarter, while Federal Bank, on the other hand, has grown their deposits by 5.4% quarter on quarter. So, resources coming in lower has impacted the credit growth as well. Advances have grown by 1.6% for Axis Bank on a sequential basis, while good resources that they have received, Federal Bank has made use of it, and the advances have grown by 5.4% quarter-on-quarter. Take a look at the slippage ratio. Now, Q1 is seasonally a weak quarter, but Axis Bank has seen their slippages rise by 38% quarter-on-quarter, and it's higher than analyst estimate as well. While Federal Bank has also seen their slippages rise by 14.3% sequentially, but it's lower than what analysts had predicted. So gross NPA in absolute value increased by 7.2% quarter-on-quarter for Axis Bank, while it has increased by 4.5% for Federal Bank. ROA movement, Axis Bank lost out its ROA by 35 basis points sequentially. On the other hand, Federal Bank has been able to improve their ROA by 5 basis points on a sequential basis. Even on ROE, it is down by 4.6% for Axis Bank on a sequential basis, while it has improved by 0.9% for Federal Bank. So operating profits, if you take a look, has declined by 4% quarter-on-quarter for Axis Bank, while it has improved by 35.2% sequentially for Federal Bank. Gross NPA ratio for Axis Bank, it's increased by 9 basis points, while on a sequential basis, while for Federal Bank, it's declined by 2 basis points on a sequential basis. In the con call, Axis Bank has guided that credit costs will increase from FY24 levels, while on the other hand, Federal Bank says that they are on course with respect to their ROA target of 1.4% by FY26. So we have some brokerages notes coming in. Citi has downgraded Axis Bank to neutral. Target price has been put at 1,320 per share, while on the other hand, Citi as well as Nomura has increased the target price for Federal Bank. MK and Investec as well has increased the target price for Federal Bank post their numbers. Back to you.
Okay, all right, Abhishek, thank you very much for that. Literally, these bank stocks are making big headlines today. Dilip Bhatt is joining in, founder at Pedigree Advisory. Dilip, thank you so much for being here. So let's start off with the banks, because it's been a bit of a disappointment. HDFC Bank, obviously, we could sort of, leave it out, say it has its own merger issues it's still grappling with. But even with Axis, and the market's reaction is very, very clear. Issues in terms of high credit cost, again, the struggle to mobilize deposits. What is your advice on banks? Are you using the dips to buy, or is it time to stay away till these issues are sorted out?
Well, I think the HDFC Bank, Axis Bank, the results really point out to the fact that everybody's struggling for the deposit growth without any doubt. So much so that if you were to revisit HDFC Bank, they recalibrated their credit growth to the kind of the deposit growth that they're going to have. So I think it's telling you a lot of things. When two leading banks are struggling to grow the deposits, so the question is, how is the credit will be growing? And then what happens to the NIMs? So I think all this point towards the fact that the banks as a sector possibly will move sideways. There may not be some very serious correction, but I think it will spend some time before it emerges out of this particular shadow of the struggle that they're going through. So what I would say is that banking as a sector, yes, if it falls, one should certainly look at it, but one should not be in a hurry to buy from the current levels, because I think we'll see everything. We'll see NIMs being under pressure, and maybe the credit cost, what Axis Bank has shown, maybe there's some small indication, but it's too early, I think, to really wave a red flag on that. But otherwise, the private sector banks and banking as such possibly will give you an opportunity to buy. One need not be in a hurry to rush and invest.
Tomorrow, IndusInd Bank reports their numbers, and then on Saturday, you've got ICICI Bank, and IndusInd Bank has been an underperformer. I think it's down on a year-to-date basis by close to about 13%, but ICICI Bank has been an outperformer, 20% gain year-to-date. So the street is going to be watching deposit mobilization and even the credit cost, which spiked up for Axis Bank. Those two metrics will be keenly watched. Dilip, afternoon. Thank you very much for joining in. Lots of mid-cap numbers have also come through over the last couple of days. You had United Spirits, etc. Jyoti Labs is higher. Anything that catches your attention where you would recommend a buy now or looks attractive?
Well, I think on a broader basis, the prices don't support the valuations. And while the results have not been all that great, not been all that bad, even if you say United Spirits also, I think the results were pretty okay, but nothing really to shout about. But what I would say is that the real challenge before all of us is whether do we chase the prices from these current levels or whether we wait and watch. I think from the fundamental analysis point of view, the interpretation is that some of these stocks, certainly one should wait and watch. One should not be in a hurry to buy. And we all know that in spite and despite all the problems, the money supply has been pretty good, especially from the domestic and the retail side. So that will still drive the prices, or maybe the prices will hold on. But what I would say is that I'm not really so excited about even the mid cap, because I think mid caps are trading at a very exorbitant valuations, the ones which we like. And that being the case, I think we will just wait and watch for a while. Did not be in a hurry to buy.
Okay, all right. Dilip, stay with us. We have to take a quick commercial break here. And we'll come back with more on the other side. We'll put the spotlight on stocks which are buzzing from the auto space as well. There is Tata Motors going up, and there is Ashok Leyland, which actually is on the downside. So stay with us. All of that coming up.
Welcome back. Let's shift gears now to the auto space. Tata Motors is the big winner on the Nifty, 5.5% on the back of a Nomura upgrade. Hormuz joins us to tell us more. Hormuz.
Big upgrade coming in there for Tata Motors from Nomura. They've upgraded their recommendation to a buy from the earlier rating of neutral. They've raised their price target to 1294 from the earlier target of 1144 or 1141. Now this 1294 is the highest price target for Tata Motors on the street. And this is because they see that JLR's execution can lead to significant upsides going going forward is what Nomura is having to say, and which is why they have raised their target multiple to JLR for JLR to 3.5 times EV to EBITDA from the current 2.75 times. They also say that the current demerger of the CV business that they are undertaking will unlock significant value going forward, and their EBIT margins have the scope to rise to 8.5% this year, 10.1% in FY27, and even to 11 to 12% by FY30. And that is on the back of the rundown of the Jaguar, the ICE versions of the Jaguar, the success of the new EVs, and the more premium Range Rover variants that the company plans to bring out going forward. Now, they also believe that the net debt for Tata Motors may move to net cash by FY26 and 27, and as a result of which you are seeing this big up move for Tata Motors, the stock almost contributing 25 points to the Nifty upside, the top gainer on the index today.
Okay, and what about Ashok Leyland? Looks like a bit of a margin miss.
It was a margin miss. So the numbers were a miss on all fronts, but what the street looks to be taking heart is the commentary from the management. I'll take you to the numbers first. Revenues were up 5%, but they were below the poll estimate of 8748 crore. EBITDA was also up 11% from last year, 911 crores, but that was a significant miss from the estimate of 996 crores. The margins at 10.6% was a 60 basis point expansion on a year-on-year basis, but around 70 basis points lower compared to what the estimates were of 11.3%. The net profit also was down on a year-on-year basis and also below estimates as well. Now, coming to what the commentary the management had to say is the fact that they are saying that the volumes that they had in the first quarter are comparable with the first quarter of FY19, which was the peak, which was the previous peak that they had, and the CV volumes that they had this quarter were the highest ever, and they remain focused on achieving a mid-teen margin going forward in the medium term. And they also spoke about the launches that they plan on doing. They said that they are planning to launch their second ELCV, which is the LEV3 this month, and that will also contribute to gains going forward. And the stock has recovered almost 2% from the lows of the day and is trading at a current PE of 27.1 times, which is in line with its 5-year average multiple of 27 times as well.
Okay, got that. Thanks very much for it, Horma. So those are the two auto stocks in focus. Dilip, first, let me get to Tata Motors. I mean, this update that's come in, the brokerage note, that's really caused a fresh stir on the stock, 5% higher. What's your sense? I mean, do you think at these prices, there's still more value left on the table?
I think Tata Motors certainly has some more steam left without any doubt. But would I buy at these levels? No. If I'm holding on, I will certainly hold on to my investments, but I will not think about buying. But I think some of the statements, some of the corporate developments that are going to happen out over there in terms of the demerger of the CVs and the passenger vehicles, I think some of these corporate events will help Tata Motor remain in the radar of a lot of investors. And possibly, when these kind of things happen, there is a value which gets unlocked and the SOP really turns out to be much higher. So what I would say is that Tata Motors, yes, I would still hold on, not make any fresh buys in the current levels.
Okay. All right, Dilip, we will leave it on that note for today. Thank you so much for joining in. Appreciate you being with us. We'll take a break, come back on the other side, and we'll have Nilotpal Sahai of HSBC Global Asset Management to give us his sense on the market.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Skill loan scheme will be revised.
Okay, it's a wonderful screen because the global markets have been down and out. Europe is down, Asia ended lower, and of course, US did what it did. But here, I mean, it's just sort of nothing. 10-point cut. It's as flat as they come. And there is enough happening in terms of stocks on the upside as well. Market breadth, by the way, it's not just the Nifty. Market breadth is almost evenly split, 1:1, almost one stock up for one stock down. There is some news on Glenmark Life, and we'll have more context on this in just a bit. But the company has been asked to deposit interim environment damage compensation. That is what is coming through. Gujarat Pollution Board directs closure of production activity at Ankleshwar unit. That's essentially, but the stocks sort of, it was up 3. I think it's up 3 even after that news has come through. We have Nilotpal Sahai, who is head of equities and fund manager at HSBC Global Asset Management. Nilotpal, good to have you with us here. Thank you for your time. I mean, I don't think I should ask you whether you are surprised by the resilience because, you know, it's a constant thing, right? Whatever you throw in the market is just been rock steady. And I think it's just been a function of very strong liquidity, which is coming in every day, but also a lot of cash which mutual funds are sitting on, right? Our colleague Nimesh had done a piece about 1.25 lakh. The number is a week old. It would be larger now. So just how do you navigate this? Do you think if, say, for example, the US tech sector takes a bit of a dive, it will have any impact at all here in the market?
Thank you for having me on the show. Yeah, a very pertinent question, and this is a question that we deal most often these days, is that why is the market so resilient? So obviously, a part of the answer lies in the fact that the wall of liquidity, which is very strong and continues to come at every day. So there was an event 2 days back, the union budget was presented. There was a bit of uncertainty and apprehension about the budget, what could come, and now that has also gone past. In fact, there is a sense of relief because there is a policy continuity which is there, both in terms of the tax regime, the slight increase there, but most importantly, in terms of where the direction of the government could have been with respect to the capex and consumption. There was an uncertainty about the fact that how did the government read the mandate, and this was the first policy action after that. So a lot of would have depended upon how they would have read the situation. But what has come out is a sense of broad-based continuity, which is there. Now, given the fact that what we continue to always maintain, that the most important thing is the corporate earnings, and in the last 3 years, the corporate earnings have become 3x to 4x for the Nifty companies taken together. And going forward as well, the expectations are in line with 13 to 14% CAGR for the next 2 years. Now, that's the consensus number. Unlike in the past decade, where the corporate earnings numbers were not met, we are meeting the corporate earnings number for the last 2.5 years or so. So if you combine all these factors of the liquidity as well as the corporate earnings remaining strong, and the average valuations also now having gone up on account of the higher ROE, is that there is, especially in the large caps, the valuations are fair. So I would tend to think that the money can continue to come in and still we can get the investable ideas at these levels also.
All right, Nilotpal, just hold on to that thought for a minute. We just have Loris Labs. The numbers are up for our viewers on the screen, and it appears a rather weak set of numbers actually, because there's a big margin miss. Even the absolute EBITDA number has missed our estimates by quite a large a bit. Remember, on a sequential basis as well, this 14.5% odd compares to around 17%. When we are at CNBC TV18 had spoken to the management last, they said at some point of FY25, they expect to give margins of close to around 20%. For starters, though, it's way below that. So we'll have to gradually observe how exactly, this margin trajectory improves, because we had quizzed the management and they said they're quite confident about the 20%, but growth needs to pick up and then margins as well will come about. For the time being, this set of numbers are rather weak. Well, hi, Nilotpal, and thanks a lot for speaking to us here at CNBC TV18. Well, as you said, you prefer the large caps in comparison to the broader markets as of now, and that would make sense because valuation-wise, well, that still looks more attractive in comparison to what's happened in the mid-cap space. What are the sectors you like as of now? Banks, everyone's quite positive over there. The problem now is suddenly the FIs have returned to the selling side of things, and their largest exposure is to the banking names. So in spite of fairly okay valuations, you still have selling out there. What's your preferred sector?
So actually our preferred sectors are real estate and the industrial complex, the economy plays which are there. On the banks, we have a neutral to negative view, especially the lending banking sector. If you look at the wider financial sector, then we have got a more positive view on some of the non-banking finance companies, which are doing pretty well. And we also have got a positive view on the capital marketplace. But when it comes to the banks, we have a neutral to negative view, and that is because of now the weakening earnings momentum. Even though the valuations are among the most comfortable across all sectors, but we are now beginning to see first signs. Whether we can extrapolate the weak NPA trends or not, I'm not very sure. But still, the first signs of the NPAs have begun to come in both from the banks as well as some select NBFC. So I would say yeah.
So this, neutral to negative call on banks is for PSU and large cap private sector banks, right?
Yes.
Both. Okay. What about real estate? You said you're constructive on real estate. There has been a taxation change in the budget. How does it impact listed players for investors, retail shareholders who hold real estate stocks?
So firstly, a lot has been talked about the tax change in the budget, but let's look at the numbers and then we realize that it impacts on the individual case-to-case basis. If somebody has seen huge price appreciation in their property, then for them, the new tax regime is better. On the other hand, if somebody has not seen the huge price appreciation and it is more or less in line with the inflation, then the old regime is better. Having said that, we should also note that the investment into investable in the Section 54 of the IT Act is still available in the new regime. So one can still save tax even in the new regime. But I also must add that the majority of the purchase in the real estate is for personal consumption. And there, the important factor is not the end taxation, but the more important factor is affordability and availability of housing loan. And affordability consists of the EMIs and your income levels. And EMI is dependent upon the property value as well as the interest rates. So I tend to think those are the more important factors than compared to the tax structure or the change in the tax structure which has happened. Now, having said that, let's look at some of the structural trend which has happened. For starters, demand continues to remain strong and keeping pace with the strong pre-launches as well as the pre-sales, the numbers that we see. One data point is that inventory to sales of top 7 cities is now down to 1.5 years as compared to 3.4 years in fiscal 18. The second data point with respect to affordability is among the best that we have seen in the last 15 or 20 years, that continues to remain very strong for the buyer. When it comes to the sector itself, then the disruption has also meant that the consolidation is happening in favor of the larger players, predominantly the listed players. So both from the property buying as well as investment in the property companies is concerned, that we continue to remain constructive. It has been an overweight sector for quite some time, more than 3 years or so, and across our strategies, we are constructive here.
Fair enough. Got that. Thank you very much, Nilotpal. We will leave it on that note for today. Thank you so much for joining in. I really appreciate you being with us today. By the way, those numbers that came out for Westlife, once again, extremely disappointing. I mean, the going has been difficult for a lot of these QSR companies, and Westlife has seen a big drop in margins as well. It's a top-line miss. I mean, top line hasn't grown at all. And it seems that those operating costs are really eating into margin. Stock's down 3%. And this after being a very poor performer over the last many months. In this year, calendar year 2024, Westlife hasn't done anything. It's absolutely flat when the market has galloped along. And over the last 1 year, if you look at a 12-month time frame, then it's actually down 9-10%. So QSRs, the going is simply not improving because the consumption patterns have been more on the discretionary side, more premium side of things perhaps. So there you go. And not much changing in this quarter as well. We do need to take a quick break on that note. Come back on the other side and we have a special announcement for you about an exceptional evening where we are honoring the heroes of India's economy, a prestigious ceremony where we are celebrating the SME champions who are building our nation brick by brick. With the 5 trillion economy on the horizon, we must acknowledge the heroes, our small and medium enterprises. India's one of the coveted SME award platforms is here to recognize, honor and celebrate the builders of India's economy. HSBC presents CNBCTV18 SME Champion Awards, all set to finally announce the winners tomorrow, 26th of July, 5:30 p.m. onwards.
Facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year.
Welcome back. Let's move our focus to SBI Life Insurance. Stock has been doing well. The company reported a 20% jump in total APE or annualized premium equivalent in the first quarter. Colleague Yash caught up with the company's MD and CEO Amit Jingran and started by asking about the strategy towards growing the protection book. Take a look.
We had some negative growth in the protection segment in the first quarter. But to counter that, we are coming with some new products. One of the products will be on our major banker partner SBI's online channel, YONO that is. And that product is we are shortly going to launch. With these products, we expect that we will be back on track with the kind of growth that we have been seeing in protection segment earlier.
Okay.
And that will take care of our...
and what could be that number Q2 onwards, and for FY25, the protection growth both on the individual and group side, you said that you will get back to the earlier growth. What could be that number that the market should look at?
We are looking for a total protection contribution to our APE mix in around 10 to 11% kind of number.
Okay.
So with these products, I am very sure that we will be able to drive that number.
What, according to you, could be one or two biggest risks as you see to your guidance of 28% on the margin?
Of course, the product mix remains the biggest risk for us because ULIP, you are aware that have lower kind of margins. And with the kind of traction that ULIP has in this market in the country at present, that is the biggest risk to us.
What is your analysis in terms of the kind of impact that you could see on your VNB margins because of higher surrender value?
See, so regulators' action, I firmly believe, are always good for the industry in the long run. SBI Life having a much higher share of ULIPs.
Correct.
The effect of surrender value on our margins are going to be the least.
Okay.
Even in our non-par products where surrenders happen, our surrender percentage is very low, and our surrender values that we were offering as of now were already higher than the market and much closer to the enhanced surrender value that the regulator is now asking us to improve. So based on those facts, we are sure that the effect on margin for SBI Life will be much lesser than other industry players.
Okay, much lesser would be if someone saying 100 basis points impact. What is your understanding on the quantification of the impact?
Yeah, so yes, that is. I know you are very particular about numbers, and you want me to say something.
Could it be just half of that, about 50 basis points?
You can say that it may be around 50 to 60 basis points only.
Okay, that's the big mover of the day, SBI Life on their numbers. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. Also, a few BTST calls from our technical experts.
Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Peer Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture.
Welcome back. Well, let's focus on the Laurus Laboratories stock. You know, the stock was lower in trade, but it's seen a big recovery from the low point of the day. That's because of the commentary. The FY25 outlook they've maintained. They're looking at delivering in the medium to the long term. Now, the contracts as well as commercial opportunity in the late phase NCE. And also they go on to state that projects with EBITDA margins improvement That's something that they are focusing on. So because of the positive commentary, the stock that was down closer on 3%, 3.5% odd, well, we've seen a big recovery. And, the last I checked, actually, the stock had moved into the green. We'll be talking to the management tomorrow and we'll quiz them. What are the timelines when you see the margin improvement? But for the time being, the street has bought into the stock because of that positive commentary that's flashing for you on the screen. Well, let's get back to the markets then, and let's get an insight into D-Street chatter. Nimesh joins us to fill us out with what he's picking up. Well, Nimesh, what are you picking up? That's sort of a day, right? You throw the negative news, and the bulls just come and they punch it away.
Absolutely. So, a good recovery in the markets. In fact, the Nifty is almost in the green. And despite on a day when you see such a weak global cues, right? Still. Overnight, we saw Nasdaq down 3%, and still we are almost in the green. So, that's the kind of a market. Looks like, today's recovery is also backed by institutional buying. So, the sense I'm getting is that some bit of cash is getting deployed at these levels from the domestic mutual funds. Even from an FI flow perspective, we've seen large sell-off in the last couple of days in the cash market. But that looks like today there is a small basket buying, is what I understand at the leading FI. So the FI number could be quite interesting. But remember, because of the expiry, it might get skewed a bit in terms of the institutional data. Also, the big large block deal of RBL Bank of 1,100 crores will have an impact on the institutional flows today. The bank Nifty was a big pain point, right? And rightly so, because of the weak numbers from Axis Bank. But even there, we've seen a bit of recovery, and largely it's recoveries on the back of HDFC Bank. Now, the feedback is, looking at Axis Bank and some other private bank numbers, there is a chatter that maybe the HDFC Bank numbers look quite good, and maybe that explains a bit of recovery in HDFC Bank stock today. Technically, I guess 24,100 is a big crucial support level on the Nifty on the downside, so that needs to be watched. But given the fact that there's so much of liquidity which we've been talking about, the dips are getting bought, and today looks like it's a day the recovery is backed by institutional buying.
Well, that's right. The 24,100 very important. We went there on the budget day, and from there we recovered.
Not even on budget day, even on July 4th on the election day. I guess that was a level from where we bounced back. So I think that's a big support level now.
Okay, all right. Nimesh, what about individual stocks? What are you tracking?
Well, earnings season, as and when the earnings season gets over, the blocks are back. So, and again, Axis Bank was a classic example. RBL Bank was a classic example. Results done, and the PE sold their entire 7.5% stake. Now I understand the next big deal to watch would be Hitachi Energy. The stock is almost doubled in the last, say, 6 months or so. In Y2D, the stock is almost doubled, sitting on a market cap of close to 50,000 crores. Now I understand there could be a large block deal very soon. The promoter entity owns 75%, so it looks like the parent could sell a large chunk in Hitachi Energy. So that's the first one. The second stock is Tata Motors. Again, big move on that stock on some strong buying as well. There was a number upgrade in the morning. They've hugely upgraded the stock to a buy, and they've raised the target price sharply. And I guess that reflects in the stock price today. The third name is Avenue Supermart. Quietly, the stock has relatively outperformed in the consumption basket in the last couple of months. And now I understand some long-only funds are quite active. A leading long-only fund is actually looking for block bids as well in Avenue Supermart. And the last is GAIL India. Well, the entire gas energy basket has done well today. GAIL India stands out purely on back of buying flow. So I understand a domestic leading mutual fund is an active buyer in GAIL India, and hence big move and in large volumes as well.
Nimesh, that Hitachi is interesting. So another Whirlpool, Timken. On those lines, you said promoters hold.
Looks like Prashant. As I said, the promoter entity owns 75%. The stock is doubled in the last 6 months, trading at 50,000 crores of market cap. I was just looking at the trailing P. The stock is trading at a trailing multiple of 307x. I was just looking at the parent's valuations on Bloomberg, and the parent on a forward 25 private price to earning is quoting at just 22.5 times. So big valuation gap between the parent and the Indian listed company, and maybe that could be the one reason why the parent could look at. So I don't know. Frankly, I'm not too aware of the timelines, but the indication is that the work has started, and potentially there could be a block in Hitachi Energy very soon. And as I said, the promoter, because they own 75%, could look to dilute and raise money here.
300 times for the parent, 20 times for the India entity, right?
No,
those are numbers.
the other way around. 300 times for the
India entity. Of course, yeah, sorry.
And parent quoting at
Maybe we should write to the parent telling them what happened to Whirlpool. Whirlpool, the global sold, and the stock doubled.
The stock is doubled, yeah, exactly. So that's the kind of liquidity, right, Prashant? And in fact, a lot of large HNI investors have been talking about this, right? They've never seen it in their lives. parent selling out, and after that the stock goes up. So that's in the market for you.
Yeah, absolutely. And that's why a lot of MNC IPOs are also expected, right? I mean, I think Hyundai will be the first one and many more after that. Well, Nimesh, thanks very much for that interesting list of stocks. Ashish Kayal is back with us. Ashish, 310 calls, 318 actually now. But what do you have?
See, if you look at Jyoti Labs, it showing a very strong break in today's session. Got some profit booking, but I think the stock can continue to move up from here on even tomorrow. So it can be a very good buy at these levels. And we can expect the stock to reach towards the level of 580. One can maintain a stop loss of 535. And the next stock can be BTST, which will be SBI Life. We can clearly see it's near the day's high. The stock has shown very strong momentum. It's not stopping anywhere, and we can clearly see there is no upside hurdle as well. There is no resistance as the stock trades at 52 weeks high. One can create long positions here, aiming for the target of around 1780 on the upside, and we can maintain a stop loss of 1635.
Thank you very much for that. In the next 30 minutes or so, we should have numbers coming in from Tech Mahindra. It will be the last of the large cap IT names reporting numbers. Expect a muted quarter, a little bit of a growth on the top line. So constant currency revenue growth is seen about 0.4, 0.5%. The telecom business growth will be under pressure, but the other businesses are likely to, perform slightly better. Some improvement in margins. Remember, Tech Mahindra's margins are much lower than peers. It's been in, mid-single digits. So this quarter, and there has been a slow recovery in their margins, but margins are likely to inch up, driving a 33% jump in the company's profitability. Well, there are a few things you need to focus on. One, the company under the new management, the CEO, Mohit Joshi, has laid out that margins will improve to 15% by FY27. So that's 3 years hence, a little less than 3 years. But what will be the glide path? How much can you improve margins this year? Secondly, deal wins for Tech Mahindra last year have been lower than what we've seen in the prior year. So in FY24, average deal wins were about $400 to $450 million every quarter, which compares with an average of $700 to $750 million. So secondly, is there a pickup in deal wins for Tech Mahindra? Because peers are reporting very strong deal wins. So those would be the two key things to watch from Tech Mahindra this time. Get into a break. We'll come back with more on the markets. 10 minutes for us to close trade.
Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research.
Welcome back. Well, a few stocks are moving and they're moving higher as we speak. Loris Labs is the one that we had already highlighted that the street likes that they maintain their outlook. So that's why that stock popped up. United Breweries is putting on some weight now. That stock is at the high point of the day, up closer around 4%. And India Cements is another one that's perked up in trade. So keep an eye out on a few of these names. Independent market expert Amrish Baliga joins us on the show. Hi Amrish, good afternoon. Good to see you, Ben. Let's get straight to a stock idea. What do you have for us today?
Good afternoon, Nigel. The stock which I have for today is Bank of Maharashtra. I mean, it's quite an old bank, established in 1935, about 2,500 branches, mostly in Maharashtra, as the name goes. In the last 3 to 4 years, we have seen consistent improvement in performance. I mean, if you remember, the stock used to quote at about 12 to 15 rupees in those days. In Q1, it's posted the highest quarterly net profit till date, about 24% up Y&Y, clearly beating expectations. The overall deposit book also has climbed up about 10%. And if you look at the loan book, that's climbed about 19%. Asset quality has improved sequentially with gross NPAs falling about 16 bips, about net NPAs falling about 2 bips. Currently, it's about 1.85% and 0.2% respectively. And the focus is still on the NPA reduction. In fact, there's a special NPA reduction plan through a one-time settlement, and expecting about 500 properties to be auctioned by September, which will actually bring down the NPAs still further. Expecting an EPS of about 8.5 for FY26. So I have a target of 85, which is about 1.75x the adjusted book value. And I mean, if you look at the last 6 months, it's been consolidating extremely well in this region of about 60 to 70, 72 rupees. So I think it's surely time that we could see levels of 85 over the next possibly 6 to 8 months.
Okay, got it. Amrish, just getting your thoughts on any of the earnings today. By the way, Jyoti, we haven't discussed this stock. Jyoti Laboratories again came out with a phenomenal set of numbers. I mean, the revenue, the volumes, I don't know how they're doing 9-10% volumes, but they are, and the stock's up 7-8%. So in case you have any thoughts here, or maybe in Ashok Leyland, or even Nestle, I mean, some of the key results of the day. Anything that you like?
In fact, Jyoti was on our buy list. In fact, we have a price target of about 570, 580. I think I'll have to revise this now looking at the sort of earnings which have come. I mean, clearly, it was painful holding Jyoti about 2 years back. But then the sort of performance they've been showing for the past couple of quarters, and especially this quarter, I think we should see much better levels. I mean, at least looking at the results, I mean, the initial thought is, I think the target price should go up to at least 640, 650. So I'll just hold on.
Any thoughts on Protean eGov? This is a stock which has moved up 60% this year. It's a creator of digital infrastructure. So even in the budget, there is so much emphasis on formal job creation, first-time employees with the EPFO. There will be a contribution given by the company, the government to the company. So since this company caters to the NPS, it helps with PAN card issuance, verification, etc. It's expected to be a beneficiary of this formalization of the workforce. But the stock is up 60% this month. Do you track it?
Yes, I've been tracking this on and off, and the sort of like announcements which have come in the budget clearly is extremely positive for Protean, and because of which we have seen this move. But post this move at the current levels, I'll not really jump in and buy fresh, because the upside, immediate upside from here could be quite limited. I mean, if you're talking of the next 2 years, yes. But then before that, I think we should see a decent correction to buy in. I mean, I would be comfortable buying this stock closer to about 1450, 1500 levels, not at the current levels.
Okay, by the way, look at Adani Green surge, 7.5% numbers today. Stocks up about, 7.5%. The surge has happened in the last half an hour or so. The other one is Tata Motors DVR. So not just the basic share, the plain share, but even the DVR is up and away, 6% on the higher side. I think we are down to the last couple of minutes. So let's start recapping what has been another resilient day, strong day. The reason we say that is that you have to constantly contrast the Indian screen with what's happened around the world, with many of the European markets still down 1.5% to about 2%. Wall Street under pressure, all of Asia selling off. But then we've had a buy on dips play out yet again. And this, by the way, despite a lot of selling in the banking side of the market, because the bank Nifty is ending with a cut of almost 1%. So banks are a problem, but then there are other pockets of the market which have seen plenty of traction. So Tata Motors, as I was just mentioning, is the leader on the Nifty, 6% higher. ONGC is keeping it good company. ONGC up about 5%. BPCL also from the PSU space about 4% higher. L&T's numbers have been very well received by the market. Almost 3% up on L&T as we are actually almost 3% up on L&T as we're closing out. Kotak Mahindra Bank and HDFC Bank have tried to mitigate the huge downside pressure that Axis has exerted on the index today. So these are the ones which have tried to sort of counterbalance to an extent. And we've had some buying on tech names, TCS, by the way. Let's look at TCS, check out Wipro as well, some green over there, 1.5% higher. Not so on Infosys, but TCS and Wipro, they have been gainers on the upside. But guys, I guess, Axis remains a big watch point now. ICICI Bank, let's see what it says. But yeah, from the large cap space, maybe probably the most disappointing earning in the last 24 hours.
Absolutely, no doubt about it. And, just what, I think we're just a minute away still from the market close. And it's going to be a flattish kind of, look at that. I mean, the Sensex is down 70, the Nifty is up about 1.6, 1.7%. We'll have, of course, Tech Mahindra numbers also in the next 1 hour or so. Actually, maybe in the next 30 minutes. And that's the one to watch out for as we come back tomorrow. Tomorrow, I think we'll also have numbers from Emphasis. And of course, going into the weekend, there'll be ICICI Bank, etc. So yeah, I mean, lots of earnings to really track, but more the number of disappointments clearly a lot longer as compared to, there's no real stamp. By this time in the earnings season, you have 1 or 2 really blowout numbers. Do we have a few? I'm not sure.
Ashok Leyland, Nestle, nothing today. I mean, barring Jyoti, even Jyoti is not a large stock, barring Jyoti,
or
which was
SBI Life is a pretty decent set of numbers.
The insurers, yeah, they've been doing a good job.
Insurance companies have reported good numbers.
Yeah, no, absolutely. Okay, so I think it's a wrap on this edition of Closing Bell here from all of us. Goodbye. Thank you very much for staying with us. But there is Market Forward. Rima and I'll take that forward in just a bit.
New varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows.
Markets end flat as the Nifty and Sensex recover from the morning lows. This even as global markets struggle. Nasdaq overnight was down 4%. Banks, metals and real estate were the pain points, while auto and pharma put up a strong show.
Axis Bank slumps on reporting a weak performance. Profitability takes a knock. Slippages see a sharp rise. For Canara Bank, it was a mixed bag. Asset quality improves, but net interest margins slipped to a 7-quarter low. In the insurance space, SBI Life reported an inline set of numbers. Margins missed estimates, but the management is confident about a 20% APE growth for this year.
Tata Motors rallies to the high to hit record highs as Nomura upgrades the stock to a buy. The brokerage sees multiple levers of growth going forward for the company. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we discuss everything which is relevant today and which will be relevant as we come back for trade tomorrow as well. I'm Prashant, with me, my colleague Reema. Reema, hi.
Hi, what an amazing trading session, right? Very, very resilient. The recovery that we saw from the day's low in the face of weak global cues. We'll talk all about this in the next 20 minutes. All the big news, the key developments in Dalal Street, top corporate voices and the events to track ahead. What's the word for this market? How do you describe it? Resilient?
Definitely quote it. Yeah, I mean, it's just, there was the, I mean, let's count, right? There was the election result. Yeah. There was the what after budget recently. The overnight, I'm missing one, but Nasdaq fall last night. Yeah. And I think there's been one more, but, and the markets come through with flying colors and has not really, it's not sold off, you know, what, 3, 4, 5%. We've not seen those kind of falls. Sharp cuts, yes. I mean, as on the day of the budget, the 4th of June, but nothing really has come through in terms of a significant cut. And a Nasdaq 4% fall is not small, but look at the market close. You wouldn't guess what happened to the US market. You wouldn't guess that the market in the US fell in any meaningful way looking at the close. So that's essentially, you know, the strong local flows, domestic flows which have come through, which are coming in. Mutual fund managers we speak to are saying that the flow remains as strong. You know, a lot of mutual funds are sitting on a lot of cash. That number was about 1.25 lakh crores about a week ago. And by some account, the number is even higher now. So, you know, dips are being bought. You know, Asia was lower, nothing large, but 0.75%, 1%. Europe largely has been down. US, look at futures, there's been no real follow through after yesterday's sharp cut. You know, it's largely it was an earnings-led disappointment in the US. Extended positioning, etc. also mattered. But is there really a big trouble brewing because of some macro worries or some really sharp earnings slowdown? Former, no. Latter, I mean, we'll get more numbers from companies like Microsoft and, you know, Meta and others, which will report next week. So that will perhaps tell us more because the mega caps have what has driven the rally in the US, and I think we'll have to see. Mid caps and small caps here traded absolutely flat, slightly lower, so underperformed what the Nifty did, but can't complain at all with today's market action. Reema.
Well, it's an absolutely flat close. The Nifty closing above 24,400. But after recovering 200 points from the day's low of 24,410. Mid-cap index too ends with a 0.25% cut, but that too saw a recovery of more than 500 points from the day's low. Banks were the problem pocket. The Nifty banking index down close to about 1%, and this entire week it's underperformed. Week to date, the Nifty banking index is down close to about 2.6, 2.7%, and today the pressure kicked in on account of Axis Bank, and even ICICI Bank was a bit nervous. On the way up, it was largely the oil and gas names. Pull up the Nifty oil and gas index, and you had names like ONGC, BPCL, GAIL. In fact, all the oil marketing companies were higher, and that pushed up the Nifty CPSE index too. So that was the gist of today's, trading action. Here's what we have for you on our show today. The top movers and shakers of the day with Hormuz, a bunch of earnings, so including Axis Bank, Laurus Laboratories. Tata Motors was in the spotlight on the back of a Nomura upgrade. And last but not the least, we tell you the big events to watch tomorrow. So let's get to Hormuz now to take us through the big movers and shakers of the day. Hormuz.
You were right when you said you can't guess by looking at the price action as the kind of session we were expected to have, and we did end up having. But there were plenty of movers in the broader markets. We start off with some earnings reactions today, and actually first start off with the metals pack, and that sold off very significantly. That is the one pocket where the pressure continues to remain. Welspun, SAIL, Hindustan Zinc, Nalco, all of them, even JSPL was also a stock that sold off after its results. So metals is one pack where pressure has continued to persist. The other part where the pressure has continued to persist are the railway PSUs, and they are the ones that have continued. IRFC down 4.5% today. That's the 8th day of losses that the stock has had, the longest losing streak that it has had since the last 3 years. So 4.5% lower there. Ircon, RVNL, Railtel, Rights won an order, so you saw that sharp spike up, but then again it sold off from higher levels, ending eventually 2.5% lower. Energy stocks were the ones that were trading, that bucked the trend, if you can say that, because all of them traded with significant gains today, be it ONGC, Oil India, and the OMCs had a very good day and almost similar price action on all three of them, ending with gains of anywhere between 3.5% to 5%. And lastly, can't not talk about Tata Motors, and that was the top gainer on the index after Nomura upgraded the stock to a buy from its earlier rating of neutral, and that 1294 rupee price target is the highest on the street for Tata Motors, 6% higher, the top gainer on the index.
Okay, Hormuz, thank you very much for that. So that's essentially the wrap out of today's price action with individual stocks and sectors. Amrish Baliga is with us, and so is Shilpa Raut of Prabhudas Lilladher. Thanks very much, Amrish and Shilpa, for being here as always. Amrish, not something, actually, I should say we're used to this now, right? No matter what comes our way, the market manages to find a way. What do you make of it, Amrish?
I would say so the liquidity and the sort of confidence which most of the retail investors have on the market, that any sort of a fall is taken as a buying opportunity. It's seen as a discount sale. And that's what has proven right in the last so many months. So I think people have that confidence that markets will bounce back. But then I think, the law of averages, I think, will surely catch up quite soon, because you really can't have, like 3 years or 4 years in a row where you're getting about 30-35% sort of returns from the market, where the normal expectation is typically between 14 to 18%. And here you have so many years of, more than double the sort of returns than expectation. So somewhere I think the law of averages will catch up. And that is the time I think the retail investors will not really know what to do, because they've only seen one way up. So on the way down, they could panic, and the sort of liquidity which we are seeing right now can disappear overnight. So I think one needs to be a bit careful, especially when the valuations are so high.
But as you say, right, more money is lost waiting for the correction than the correction itself. But that caution as well, is taken on board. Let's talk about Axis Bank. That slumped more than 5%. Weak numbers. Deposit growth has slowed down, in fact, declined quarter on quarter. Sharp increase in the credit costs. So there is concern on the asset quality too. Abhishek joins in for more. Abhishek.
Well, the source of a banking business is deposits, and that is one of the weakest. That has come in for, Axis Bank on a YOY basis in last 6 quarters, and sequentially it's the weakest in last 4 quarters. So the growth rate is about 12.8% YOY and a decline of 0.6% sequentially in the deposits of Axis Bank. Take a look at the loan growth at 14.2% YOY and 1.6% sequentially, both YOY and quarter on quarter. It's the weakest growth that you are seeing in last 8 quarters. Operating profit has declined 4.1% sequentially. Core operating profit has grown by just 1.3% sequentially. So operationally, it's one of the weakest quarters that you are seeing in last 4 to 8 quarters as well. Now, slippages, they have remained elevated at close to 4,790 crores. Analysts were working with a number of 4,000 to 4,500 crore. Annualized slippage ratio is one of the highest that you are seeing in last 6 quarters, and that is why the credit cost, the annualized credit cost for the quarter was the highest in last 12 quarters, coming in at 1% versus analyst estimate of 0.45 to 0.5%. If you take a look, the gross NPA ratio has increased quarter on quarter for the first time in last 12 quarters. Even the watch list has increased by almost 11% on a sequential basis. Now, the return ratios did get impacted. ROA and ROE are one of the lowest that you are seeing in last 5 quarters, with ROA at 1.65% and ROE at 16.3%. CASA ratio in line with industry trend, one of the lowest in last 16 quarters. And PAT is a beat on our poll. Back to you.
Thank you very much for that. Shilpa, do you see more downside in Axis Bank after the slump we've seen today?
Axis Bank, no, I wouldn't say that, you can see more downside, but yes, the stock can take its sweet own time, to pass that 1200 mark again and move towards 1260 to 1280. But the downside, I guess it's now limited. You should find support at around 1140 zones from here.
Okay. SBI Life, Shilpa, any thoughts?
SBI Life today, in fact, the whole insurance sector has been, surging today. And if you look at SBI Life, the stock has to sustain above 1710 to give a more clarity that it can move towards 1760 to 1780 zones. Otherwise, it can consolidate and again move towards 1660 to 1640. So, but once it sustains above 1710, it is a very strong buy for 1780 zones.
Okay, all right. Insurers have been buzzing since the budget. Nothing negative in the budget, and earnings have been decent as well. Let's focus on the next one. Tata Motors was up 5%. Actually, on the Nifty was the biggest gainer. Nomura is up their rating. Hormuz is back here to tell us why. Hormuz.
A significant upgrade coming in there from Nomura. They have upgraded the stock to a buy from their earlier rating of neutral. The price target has been raised to 1294 from the earlier price target of 1141, and this 1294 rupee price target is the highest for Tata Motors on the street now, and that is because Nomura believes that JLR's execution can lead to significant upsides for Tata Motors going forward, and as a result they have raised their target multiple for JLR to 3.5 times EV to EBITDA from the current 2.75 times. And what they also say that the current demerger of the CV business that the company is undertaking will also enable a significant value unlocking going forward for the company. They believe that there is a scope for the EBIT margins to go up to 8.5% this financial year, up to 10.1% in FY27, and even reach levels of 11 to 12% now from for FY30. And that is because that will be supported by the rundown of the Jaguar ICEs, the success of the new Jaguar EVs, and more premium Range Rover vehicles that they plan to launch. Now, the net debt on that front, they say that may move to net cash by FY26 or 27, and as a result of which they upgraded the stock, ending 6% higher today, the top gainer on the index and a significant contributor to the Nifty upside.
Ambarish, would you buy Tata Motors?
Yeah, clearly it's on my buy list, but then after today's move, maybe I'll wait for a while and pick it up possibly closer to levels of about 1,000, 1,015. Because whatever said and done, I think the next couple of months, there is a bit of a worry as far as the inventory position is concerned, especially, the auto manufacturers in India, which also includes Tata Motors. And it's expected that possibly with the festive season coming, hopefully this inventory will get liquidated. So that's, I think, the only worry. Otherwise, like Tata Motors, I'm clearly with Nomura. I think we should see levels of about 1,300, 1,350 over the next 6 to 8 months, but better to buy on a dip.
By the way, insurers, Ambarish, any thoughts? They've been doing well at the margin.
Exactly.
ICICI Pru was a big mover, but others are... LIC is yet to report. Most others have reported, I think. Yeah.
Yeah, in fact, we've seen a decent move in ICICI Pru as well as SBI Life today. But the stock which I'll possibly pick up, and in fact I've been recommending now for a while, but it has underperformed, is HDFC Life, because that's where I think we should see a decent performance coming over the next 2 to 3 quarters. So even at these levels, I think one should look at buying HDFC Life. In fact, looking at levels of about 900 to 940 for the stock.
900 to 940, that's significant upside from current levels. Let's talk about Westlife Food. Stock was under pressure, looked like a disappointing first quarter numbers. Hormuz is back with us for more. Hormuz.
Well, the stock did fall after the numbers were announced, but it did recover from the lows of the day. I take it to the headline numbers first. It's not very promising as we speak. The net profit was down around 90% to just 3 crore. The revenue was absolutely flat from last year. EBITDA came in 25% lower at around 78 crores. The margins also narrowed from around 17% last year to just 12.7%. And also the bigger commentary here coming in is that the same store sales growth was a negative 6.7%. That is is because of a subdued in-store business performance of people not coming in enough into their stores. But the commentary from the management, before that we get to the gross margins, they improved around 62 basis points compared to the March quarter, and that is because of the cost optimization measures, lower input costs, and that was partly offset by changes that the company made to the product mix. Now the commentary from the management came in and they say that they are seeing a gradual improvement in that overall trend of eating out, and they also say that they are aiming to grow their restaurant footprint to around 580 to 630 under their Vision 2027 plan. And lastly, they are also aiming for a 15 to 18% contribution of McCafe to their overall business by 2027. So not very promising numbers coming in, but slightly optimistic commentary from the management. The stock ending 2.5% lower.
Right. Almost thanks very much for that. Ambarish, QSR names, Westlife, actually across the board, many have tried to pick names here saying, the worst is done and there's a turnaround and maybe it'll happen, but not yet.
Yeah, exactly. And if you look at the same store growth for most of them, I think that's actually a concern. We have seen that concern over the last couple of quarters, and that continues. So unless, they really go on overdrive as far as the new stores are concerned, I think it will be difficult for these stocks to, in fact, move up much more from here. So I think the only, stock where I'm decently bullish as far as this space is concerned is Jubilant, because that's underperformed for a long time. I think now they seem to have got their act again in place. So Jubilant is something which should be looked at.
Newland, okay. Let's talk about Laurus Labs. Laurus Labs reported their numbers in the last half an hour. Looked like a disappointing set of numbers, but the stock reaction was interesting. First, it declined, but managed to recover nearly 4% from the day's low. Ekta joins in with the highlights. Ekta.
Thanks for that. Well, yes, it's another poor performance or a disappointing or a volatile performance from Laurus Labs which has come through. So, for example, the revenue was up only around 1% odd. The street was anticipating 23% growth in terms of sales. Margins 14.3%, which is a decline on a Q-on-Q basis after an improvement which was seen last quarter. And the profit is coming at 12.5 crores versus 24.8 crores year on year and versus 75.6 crores last quarter. Now, a couple of key segments which really saw the decline was the CDMO segment, where the revenue was down 14%, formulations which was down 4%, API did well, it was up around 11% odd, but it was offset by the CDMO formulation business, and the biosynthesis segment was weak as well. Overall, the margins are the lowest that we've seen since Q1 of FY24, and the company has indicated that yes, this quarter was soft, but it was on expected lines. They expect a pickup in the second half on the back of deliveries in the CDMO segment.
I think it's been, Ekta, thanks very much for that. Disappointing once again. Management, of course, sounding, I remember that after the last quarter, sounding confident FY25 will be better, not putting numbers to revenues, etc. But I think there was a 20% margin that we heard from them. Stock's not done anything for a year and a half at least. So that's Laurus Labs. Thanks very much, Shilpa and Ambarish, for joining us. Good speaking with both of you here on CNBCTV18, as always. Well, let's get you some more sort of corporate commentary that we got here on the channel through the course of the day. So we'll start with BG Electroplast. Stock was up sharply today. It's done very well. It's reported a good set of first quarter numbers, but the highlight was that they've revised upwards both their revenue guidance for FY25 and their net profit guidance for FY25 as well. So the net profit guidance has been up to 216 crores as compared to 200 crores earlier.
CG Power reported better than expected operational performance. The management says any shortfall in order inflows this quarter due to the elections will be made up for, and they're guiding for margins to be maintained in teens. On the recently acquired GG Tronics, the management expects to secure a 15 to 20% market share in tenders for Kavach, which is a train protection system. And they also spoke about achieving a turnover of 1,600 to 1,800 crore rupees from the newly added transformer capacity starting next year.
Well, Federal Bank's Managing Director and CEO Shyam Srinivasan told us that net interest margins for the bank should range between 3.15 to 3.2% this year, and the bank is on track to achieve 1.4% return on assets guidance for FY26. Remember, Mr. Srinivasan's 14-year term as MD and CEO ends on September 22nd, 2024.
SBI Life Q1 earnings largely in line. The management tells us that they expect a 20% APE growth and margins will inch back to 28% in this fiscal year.
Okay, well, that's, a spattering of commentary from some of the top corporates you saw on the channel on CNBC TV18. We'll take a quick break. We are back with our popular D Street Chatter segment with Nimesh, and we'll tell you the events and earnings to watch out for tomorrow. Stay with us.
0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build
Welcome back. It was a resilient session. Markets recovered all of the day's losses to close largely flat on the benchmark indices, even though the banks underperformed. But it's time now to get you our segment, D Street Chatter. Nimesh is going to get us all the insight into what dealing rooms were saying today. Nimesh.
Hi, Ramana. A strong recovery intraday, right? I mean, the Nifty almost ended in the green despite weak global cues. I think largely because on the back of strong buying support from institutional investors. So that was a key reason for the pullback. But in terms of individual names, the first stock on my list is Hitachi Energy. Well, the stock was under pressure today post Q1 earnings, but the stock is technically doubled in the last 6 months, now quoting a market cap of close to 50,000 crores. Now I understand there could be a large block deal very soon. The promoter entity owns 75%. And if you look at the valuations, the India entity is quoting at 300 times on trailing PE versus the parent quoting at just 22.5 times on 1 year forward earnings. So that's the first stock. The second stock is Tata Motors, big move in that stock and on strong buying interest as well. And there was a Nomura upgrade as well on the stock to a buy, and they've sharply raised the target price as well. So that explains a big move in Tata Motors today. The third stock is Evans Supermart. The stock has been buzzing off late. In fact, in the last couple of months, it has relatively outperformed. Now I understand a leading long only fund is an active buyer and looking for block bids as well. And the last name is GAIL India. Well, the entire energy basket did well today, and where all stocks were buzzing, GAIL India stands out on back of very strong buy flows. Expect high delivery volumes, and I understand a leading domestic mutual fund has been an active buyer in GAIL India.
Okay, all right, Nimesh, thanks very much for that. Well, lots of chatter, and Nimesh picks up the best for us every day. Before we wrap, let's get you some key market events to watch out for. When we come back, Ekta is here. She's got the list. Ekta, over to you.
Thanks for that. Well, results for tomorrow. We have IndusInd Bank, Bandhan Bank, Cholamandalam, City Union, Equitas, SFB, Punjab Sindh. So a lot from the financials. Cipla, Indigo, Power Grid, KEC, Piramal Pharma, Quick Heal as well. Results on Saturday as well. So ICICI Bank, Dr. Reddy's, IDFC, First Bank, REC. So maybe a lot of these stocks would be in focus. There is a listing of Sanstar Limited, the IPO as well. In terms of India, there will be bank loan data, forex reserves. In terms of the US, personal consumption, expenditure, core personal expenditure, as well as the Fed balance sheet, and Japanese CPI will be released tomorrow as well. Finance ministers plus central bankers of the G20 will be meeting in Brazil today as well as tomorrow. Donald Trump will be meeting the Israeli Prime Minister, so that's something to watch out for. And the Paris Summer Olympics opening ceremony will be held tomorrow as well.
Thank you very much for that. And with that, it's a wrap on this edition of Markets Forward. Stay with us. We'll be back with more news and updates.
Structures in Nepal are yet to progress. Our government through the accelerated irrigation benefit program and other sources will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bengaluru Industrial Corridor. Government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPF.
Hello and welcome to our special broadcast. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Bulls show resilience on Dalal Street. The Sensex and the Nifty end with minor cuts amidst a global stock market rout. Disappointing tech earnings lead to the worst sell-off on Wall Street in 2 years. After a 25-year-long wait, the Supreme Court upholds the rights of state governments to levy tax on mining projects. Arguments by the union government and mining companies are rejected. This is a big win for Odisha, Chhattisgarh, Rajasthan, Karnataka, which account for nearly 90% of the mining activity in India.
We take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach.
The government is adopting a new approach to divestment, says Finance Secretary T.V. Somanathan, and rolls out a pre-declared divestment calendar, saying market starts acting in anticipation, resulting in value erosion. Asserts that selling stake in PSUs is very much on the agenda. That's another exclusive. Economic Affairs Secretary Ajay Sheth says capex at 3.4% of GDP is the maximum the government can afford given the fiscal consolidation roadmap. Also says debt to GDP ratio is elevated at over 56%, hopes to bring it down to pre-pandemic levels, but not in one go. That's another exclusive. Torrential rains lash large parts of Maharashtra. 4 people dead. Schools and offices shut in Pune. Schools also shut in Mumbai, Thane, Palghar and Raigad as the Met issues a red alert. Israel's Prime Minister Benjamin Netanyahu delivers a forceful defense of the war in Gaza amidst applause from U.S. lawmakers. Thousands protest on the streets of Washington calling for a ceasefire in Gaza.
So I've decided the best way forward is to pass the torch to a new generation.
President Biden explains why he decided to step away from the presidential race, says it was the best way to unite the nation, reiterated his endorsement of Kamala Harris. The stage is set for the world's biggest sports carnival. The Olympic Games kicks off in Paris tomorrow. The Indian contingent of 117 athletes across 16 disciplines includes 72 debutants and 4 individual medalists. Well, all of that and more coming up for you, but straight to the global market action. And overnight cues from the US spilled over to the Asian markets, while the Japanese Nikkei saw its 7th straight day of losses. Benchmark indices in mainland China tested their lowest levels since February. So what led to a woeful Wednesday on Wall Street? The S&P 500 and the Nasdaq Composite seeing the worst day since 2022 on the back of underwhelming earnings reported from Tesla and Alphabet, dampening the US market appetite for artificial intelligence. And this triggered a sell-off in tech, with other heavyweights like Nvidia, Microsoft and Apple taking a beating. The Nasdaq 100 index, which comprises tech stocks, lost $1 trillion in market valuation. But remember, these companies have also seen a massive run-up in the past year. But Dalal Street has bucked the trend, with the market ending flat but sharply off the intraday lows. So if you take a look at the Sensex and the Nifty, they recovered and finally closed just about in the red. Absolutely flat there for the markets. The Nifty, the Sensex, the Nifty mid-cap down by about 130 points. The Nifty Bank continues to be under a little bit of pressure, down by about 400 points. But the big story, and this one comes in from the Supreme Court. After a 25-year-long wait, the Supreme Court has upheld states' legislative right to levy a cess on mining and allied activities. Now, the Apex Court held that the law places no limitation on state governments from levying taxes. Remember, the Supreme Court was hearing a plea filed by the centre and mining companies. Ashmit is standing by now to take us through the details. Ashmit, significant ruling there, a 9-judge bench of the Supreme Court. 8-1 is the ruling in favour of state governments. Now, how will this court order impact mining companies? And more importantly, what does this mean for state governments?
Well, a landmark judgment, this coming in from the Apex Court, a 9-judge bench pronouncing this judgment. We don't see that very often. And importantly, a wait of 9,000 days. This case was pending for 25 years. Finally, an answer being given to a critical question. The question was, do the state governments have the power to levy a cess or a tax on the mineral output from the state? The answer is an overwhelming yes from the Apex Court. It was an 8-1 majority. The Supreme Court answering that question unequivocally. The Supreme Court holding that the state governments do indeed have the legislative competency to go ahead and to seek such a tax from the miners. That is absolutely kosher. And not just that, the Supreme Court also holding that the Parliament, that the centre can go only so far as to introduce a restriction under the MMDR Act But given as how that as of right now, there is no restriction, and therefore nothing bars the state governments from going ahead and seeking this cess, this levy, this tax from the miners. Now, clearly, the obvious impact is on the miners themselves. They will have to now dish out this additional cess or levy, and it will impact the big names. We're talking about the likes of Tata Steel, JP Associates, Hindalco, SAIL, Ambuja Cement, ACC. All of them were here before the Apex Court batting against this additional cess or levy from the state governments. That's, of course, one side of the equation. The other side is the states which are mineral bearing now have a rich dividend to look at. The states of Odisha, Karnataka, Chhattisgarh, MP, Karnataka, these are the states which bear these minerals, now will have that additional competency and power and clarity from the Apex Court to seek additional revenue from the miners. So a hugely important verdict. This is a landmark judgment, a 9-judge bench judgment coming in from the top court.
All right, Ashwin, many thanks for joining us. In Earnings Corner, auto giant Ashok Leyland reporting a weak set of numbers in the first quarter, missing street estimates across most parameters. The company posted a 5% jump in revenue on a year-on-year basis and nearly 9% drop in net profit. The management said that they are focused on achieving EBITDA in the mid-teens in the medium term. Well, that was Ashok Leyland. Nestle India reporting weak earnings, missing street estimates across all parameters. That's not all. Domestic volume growth 1% as per sources was below the 4 to 6% prediction. The management highlighted that the company faced external challenges like lower consumption growth. Concerns on food inflation and volatile commodity prices in the first quarter also impacted the earnings. The Nestle India stock down over 2% in trade on the back of that. The government is adopting a new approach to divestment. That's the word coming in from the Finance Secretary, TV Somanathan. Speaking to CNBCTV18, he ruled out a pre-declared divestment calendar, saying market starts acting in anticipation, resulting in value erosion. However, he has asserted that selling stake in PSUs is very much on the agenda.
Where else do you believe there is a strategic consideration that the government must consider, and where do you believe that the government could look at a much more commercial consideration and take the step forward as far as disinvestment is concerned, or is that not an expectation?
There are many areas where a commercial consideration could lead to privatization or disinvestment, and I'm, as my colleague Mr. Pandey has repeatedly been saying, they are not off the table at all. But it's one thing to say, this year I'm going to sell company X, and then the whole market waits for us to dump X and starts acting in anticipation, versus saying that I'm an investor. I have a portfolio of securities that I own. Some I'll continue to be majority owner in. Some I'll continue to be minority owner in. Some I'll dilute my majority stake. Some I will do nothing and collect dividends. And some I'll hold until they are repaired. And we take a pragmatic and maybe even opportunistic view of what to do with each of these. That is the new approach. But you will see disinvestments happening. They'll happen not perhaps to a declared pre-announced calendar, but you will still see them happening, is our both expectation and policy.
Well, that's the Finance Secretary, and more from our conversation with the budget makers. Economic Affairs Secretary Ajay Sheth says capex at 3.4% of GDP is the maximum the government can afford given the fiscal consolidation roadmap. Now, yesterday, the Finance Secretary had said that the government is very likely to hit at least 95% of the full capex allocation of over 11 lakh crore rupees. The Economic Affairs Secretary is also concerned about the debt to GDP ratio, which he believes is elevated. North Block is hoping to bring it down to pre-pandemic levels, but not at one go.
This budget has a clear direction. The kind of a strong support government had provided over the past 4 years has helped the economy. And what this budget commits, that significant support, our endeavor would be, government endeavor would be, keep continuing providing that support.
So around this 3.5% of GDP?
That is a very high level. For decades we have never been there.
Yes.
And so the idea is that there are two other imperatives come in. The other priority needs and fiscal consolidations. It has to be done. There are
so
the trinity which has to be taken care. The other two pieces, and who else have to do the heavy lifting? Government of India has now reached to a level which are the maximum it can sustain proportion to GDP. Second is states as a whole are spending about 2.5% of the GDP or their GSDP in capex. The quality of expenditure has to improve there in terms of infrastructure project itself.
So what would a realistic number be then to have as far as government capex going forward, if you believe that this is the most or the maximum that the government can do?
So look at this manner that where we are at this point of time, that in terms of the fiscal deficit is 4.9 this year.
Yeah.
That's what we expect to do. Next year 4.5. And that's not the end of the fiscal consolidation. We have to keep on going less, of course, with the different metrics of a debt to GDP ratio. If we are talking about 3% plus to go to capital expenditure, we are still, there are expenditure which are on the revenue side, and there also there are fair amount of expenditure, not just on education, health, which are very, very important and will find full attention of the government, but also Government of India provides grants to others to do capital expenditure. It provides to state governments of the order of perhaps about 3 lakh crore plus. Though in our books, meaning Government of India books, there is still revenue expenditure. So keeping it at 3% plus, now it has reached to 3.4%, moving forward, if on a nominal basis that can be maintained, that will be a good achievement.
We had a similar challenge last year when the budget was 10 lakh crores. We ended up spending 9.49, 95% of what we had budgeted for. But it would not be wise of us to allocate less, because if you allocate less, then there's a vicious circle that they would spend even less than that. Because in the government system, there's an asymmetry. They cannot spend more than what is allocated. So if you allocate less, they will plan to spend that and then perhaps slightly in some cases fall short of it. So honest answer, I think 11.11 is possible, but it is very likely that we'll get to 95+% of that.
Pre-pandemic, country was, or central government debt was around 48%. This ratio was around 48%. Because of the pandemic, it went up to almost...
When at about 56.
It went up to 61. Now we are 56 plus, meaning that over 4 years we have come down by about 5 percentage point. Moving forward, every year it has to be reduced so that we reach to a more sustainable.
So what is that quantum that you realistically believe that you will be able to chip away, in your words, every year?
So the policy intent has been initiated by Finance Minister. Now it is for us now to work out the ways how to operationalize this. We have certain ideas how to put it together, but that call has to be done, that what kind of a glide path has to be done over the course of next 1 year.
Well, the budget makers there, the big national story, torrential rains have left large parts of Maharashtra reeling with flooding and landslides. The Indian Met Department has issued a red alert for Pune, Mumbai, Thane, Palghar and Raigad district. A holiday has been declared in most educational institutions and various offices across Maharashtra. Flights and local trains have been delayed due to the torrential rains. At least 4 people have died so far in Pune in rain-related incidents. This after an overnight deluge caused flooding in various parts of the city. Raigad also hit by heavy rainfall. Main sources of water supply in the district crossing 50% of their capacity, causing various lakes and dams to breach their alert level. Several parts of Mumbai also witnessed waterlogging after incessant rainfall caused overflowing of dams and lakes. SpiceJet, Air India and Indigo have announced potential flight disruptions, with local trains operating at reduced speeds due to low visibility and high winds. Maharashtra's Chief Minister Eknath Shinde says preparations are in place for potential airlifting operations. Also urged residents to stay indoors and cooperate with authorities. Our team of reporters brings us the latest on the monsoon mayhem from Pune and Mumbai.
पुणे जिले के तीनों तरफा पहाड़ियों पर पिछले 48 घंटों से लगातार हुई मूसलाधार बारिश के चलते पुणे की यातायात जो है वो खराब हुई है, जान माल का नुकसान हुआ है। जो जानकारी मिली है, कल रात को 3 लोगों की पानी में करंट उतरने के चलते मौत हो गई है। वही पुणे के आसपास के डैम से लगभग 45,000 क्यूसेक पानी जो है वो नदी में छोड़ा गया है, जिसके चलते नदी के दोनों तरफ रहने वाले लोग जो है उनके घरों में पानी भर गया है और उसी वजह से माल का काफी नुकसान हुआ है। 3 लोगों की जानें गई है। सुबह 7 बजे से लेकर 11 बजे तक रेस्क्यू ऑपरेशंस जो है वो किए गए। करंट लगने की वजह से 3 लोगों की मौत हुई है। हालांकि कोई भी आदमी जो है वो उसकी डूबकर मौत नहीं हुई है।
Thursday turned out to be an extremely chaotic day for people of Mumbai metropolitan region, Raigad and Pune in Maharashtra. Right now we are in Mumbai's Andheri area, and that's Andheri subway. At present the situation is much better than what it was during the day. Andheri subway was closed for any vehicular movement due to waterlogging. Heavy rainfall led to waterlogging in multiple parts of Mumbai metropolitan region, Pune and Raigad. The situation in Pune is extremely chaotic right now in multiple areas of Pune, whether it's Varze, whether it's Singhad Road, all these areas. Water has entered housing societies. Ullas River is overflowing. That has led to massive waterlogging in parts of Ullasnagar, Thane and Kalyan. The only silver lining in this cloud is that out of 7 lakes which supply drinking water to Mumbai, 4 are overflowing now, and the water levels have reached 66%, actually are above 66%. That is the good news for Mumbai.
Well, now a problem of plenty there. That is the latest as far as the monsoon mayhem is concerned. We will head into a break, but up next, the stage is set for the world's biggest sports carnival. The Olympic Games kicks off in Paris. That and more when we return.
Skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans for helping our youth who have not been eligible for any benefit under government schemes and policies. I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6. Energy security. 7.
More earnings. Tech Mahindra has just come out with its Q1 numbers. Rima standing by to take us through what they look like. Rima, what's the quarter like for Tech M?
Well, it's a slight beat on muted expectations. Tech Mahindra becomes the 5th IT companies, barring Wipro. Actually, all the large cap IT companies have come out with numbers which is slightly better than street expectation. So on the top line, the company has bounced back to growth. In Q4, revenues have declined, but this quarter revenue growth is coming at 0.7% quarter on quarter, slightly ahead of street expectation. Margins have expanded on expected line. Margins have come in at 8.5%, but again, slightly better than the 8.2% that we were anticipating. Communication as a vertical has come under pressure that the street was anticipating, but other verticals like manufacturing, retail, healthcare have been strong for the company. A heartening feature in Tech Mahindra's quarterly performance this time is some pickup in deal wins. In the whole of last year, FY24, the quarterly deal win run rate was about $400 to $450 million. But this quarter, the deal wins have shot up to $534 million. Headcount is pick up, and headcount, remember, is seen as an early indication of demand recovery. So the headcount for the company is up 2,200 quarter on quarter, while attrition continues to remain stable at about 10%. Back to you.
All right, Rima, many thanks for joining us. That's Tech Mahindra for you. Numbers just out. In international stories that we are tracking, at least 130 Palestinians have been killed in Gaza's Khan Yunis since Israel stepped up its attack in the area. About 150,000 people have been forced to evacuate the area in just 24 hours. As of this week, 83% of the Gaza Strip has been marked unsafe for Palestinian civilians by the Israeli military. Israel's Prime Minister Netanyahu delivered a forceful defense of the war in Gaza amidst applause from U.S. lawmakers. In a fiery speech before the U.S. Congress, Netanyahu vowed to continue the fight until total victory is achieved. He also stressed on the desire to secure U.S. support against Hamas while dismissing accusations of a genocide against Palestinians, calling it outrageous slander. Netanyahu's comments came as thousands protested on the streets of Washington, calling for a ceasefire in Gaza. Netanyahu hitting back at the protesters, even accusing them of receiving funding from Iran.
Today, as Israel fights on the front line of civilization, I too appeal to America. Give us the tools faster, and we'll finish the job faster. The day after we defeat Hamas, a new Gaza can emerge. My vision for that day is of a demilitarized and de-radicalized Gaza. Israel does not seek to resettle Gaza, but for the foreseeable future, we must retain overriding security control there to prevent the resurgence of terror, to ensure that Gaza never again poses a threat to Israel.
Well, that's Benjamin Netanyahu. Now the stage is set for the world's largest sports event. The Paris Olympic Games kicks off tomorrow with an opening ceremony that will see over 10,000 athletes parading along the Seine River aboard more than 90 boats. The Indian contingent has its eyes set on improving its Tokyo medal tally of 7. The contingent comprises 117 athletes across multiple sports. It includes 4 Olympic medalists. The event is also seeing heightened security, with organizers facing challenges over the cleanliness of the river and the environment impact of the Games. Sanjay Suri is here with a curtain raiser from Paris.
The French are getting the Olympics off to a really smart start. Just consider the usual, where you have an Olympic stadium and the host country sets up effects and sets the stadium up as a stage on which to exhibit its unique talents and its history, its culture, really the showpiece for what it wants to present to the world. And consider the difference here in Paris. All of central Paris is now the stage. The Olympics athletes, the contingents will not march through a stadium. They will travel on boat along the river Seine right through the heart of Paris, a 6-kilometer long stage. Consider just how many people will watch this, about 500,000 expected, and that's a lot more than anything you can cram into a stadium. So for the first, at the first level, it really means participation, involvement of the local people and of French people and no doubt visitors in the opening ceremony. It's not just for the select few who can somehow manage entry into a stadium, but there's more to this than that. Consider that the Olympics is the biggest sporting event in the world. The number of people who watch, it's going to be such a showcase, such a show-off for Paris to the world. All of Paris will be on show. The stage along the 6-kilometer ride along the River Seine is going to take in some of the most iconic landmarks of Paris. Notre Dame, the Louvre, and this is really going to be a presentation to the world. Consider also that Paris is perhaps the most visited city in the world. By some estimates, about 50 million visitors to Paris every year, spending about 30 billion euros just within Paris. So there's a lot of money in tourism for Paris, and this is only going to multiply the viewing and invite more tourists. It makes show sense and it makes money sense. And to that extent, France and Paris particularly are already a winner.
Sanjay Suri there with the curtain raiser of the Olympic Games kicking off in Paris tomorrow. And of course, you can catch all the action right here on CNBC TV18. With that, it is time for us to wrap up our special broadcast. The news continues. Stay tuned. We're back in a moment with more.
Structure. 8. Innovation, research and development. And 9. Next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year, also to support the states in their resource allocation. Coming to personal income tax rates, I have 2 announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil.
Hello and welcome to yet another edition of Big Deal. I'm Nisha Poddar. Now, Finance Minister Nirmala Sitharaman's record-setting 7th consecutive budget focused on continuity and growth. However, there were some big-ticket announcements on taxation. First, the short-term capital gains tax was hiked on certain financial assets to 20%, while the long-term capital gains tax was hiked to 12.5% on financial and non-financial assets. Next, the buybacks will now be taxed as dividend income. And finally, in a big relief for India's startup ecosystem, angel tax was abolished, a move that will certainly help funding into the sector to go up. To discuss this and more, whatever is impacting from the budget on the deal street, let's get our team of experts to break it down and also understand the technicalities. Let me welcome on Big Deal Ajay Roti of Tax Compass, Yogesh Singh of Trilegal, Sumit Abrol from Grant Thornton, and Amrish Shah from Deloitte India. Gentlemen, so good to have you on CNBC TV18. Now, my first question to you, Sumit, how is budget for M&A and deal makers overall?
Thanks for that, Nisha. And to be very honest and to set the context here, I don't really expect annual budgets to have a very meaningful direct or near-term impact on transaction activity, unless, of course, we are referring to extraordinary events like we did in 1991 on events that transform and change the course for the economy and maybe the country as a whole. But I do see the budget to set more of a directional theme for the deal market, which is basically around ensuring that the economic buoyancy remains intact and the broader framework for around the ease of doing business is progressive. And then, of course, there will always be themes and sectors which will emerge as favorites, which will get wind beneath their wings and through incentives and packages and a whole lot of announcements there. But when I look at this year's budget, Nisha, there are a couple of themes, big themes that really stand out for me, which are relevant for the deal market. I think it keeps the country firmly on the overall path of Viksit Bharat, which is all themed around the 7% economic growth that we've all been so used to hearing now. And that also, I think, within an overall framework of financial prudence and fiscal discipline. And B, it seeks to stimulate domestic demand through a plethora of employment schemes and disposable incomes, increasing disposable income, which should also keep the market sentiment strong. So both of these, I think, augur very well for the deals market. And of course, then there is abolition of angel tax, which is expected to seriously bolster the activity in the early stage ecosystem, which incidentally, again, contributes maximum volumes to the real market.
That's right. In fact, angel tax is on top of my mind. In fact, the amount of euphoria that I have seen because of one budget move in the entire startup ecosystem is because of the abolition of angel tax. This has been an ask for a very long time. Ajay, how do you read into this and how will this work and impact now fundraising?
Hi, Anisha. Thank you. I think, from a deal and startup space, this possibly is the biggest headline that angel tax has gone away. I think, first of all, it shouldn't have been in the statute in the first place, but we had it for a long time and it's finally gone. This government in particular tried to repair it a few times by, taking feedback, having carve-outs, changing valuation methodology, etc. But I think now they've clearly decided that this is beyond repair and has to go. More importantly, I think it's clearly an indication of the government listening to what has been the ask of the entire startup sector. And I don't think there's a single founder who would not have made this request to actually have the angel tax abolished. I think it's one of the good moves, better late than never. And it should, like you said at the beginning, should actually be a positive for more funding into the startup. And this always used to be a problem on valuation, especially the new age startups where the valuation was not really something that you could justify with any method that you could apply.
That's right. And it comes at a time when the startup ecosystem with lower fundraising, less liquidity, really needed some support from the government as well. Now, Yogesh, from the legal point of view, how do you see this impacting the deal documents, the legal documents, and the overall ecosystem?
Look, I think in the startup space and even VC funding deals, we have a very mature market in India now. But what was happening was there was also these kind of taxes when they were being applicable, they were making a lot of deal terms very difficult to impose. And it was bereft of logic when it came to a deal market where funding has been generally difficult, right? And also it has meant the market required a lot of realism. There were a lot of valuation corrections, down rounds, bridge rounds that were taking place. And when it came to legal documentation, there was a lot of struggle in terms of how to implement anti-dilution rights, how to implement some kind of a cover for an investor. And companies were effectively getting taxed in case they were underperforming from the time they were raising capital. I think those kind of things now behind means that the deal term, that many of the standard deal asks that investors have become much more easy to implement. Particularly, I'm happy that things like anti-dilution and valuation protections will become relatively easier. It's certainly a positive move. I would definitely add that it would have helped if there was some kind of a indication on what would happen for all the investigations that have been ongoing for this intervening period when the angel tax had been levied. But I couldn't ask for more at the moment.
All right. So that point noted, Yogesh, the first clarification required definitely is also on the investigations that are ongoing. All of them will vaporize, or what happens to that? So that's a good question. Amrish, anything additional on angel tax? If not, then on the big offer for sale being included and that impacting the capital gains for the founders, promoters and investors for IPO-led companies.
I think before we go there, just one addition to what Sumit mentioned. I think if you look at this budget, I think overall from an M&A perspective, it's more an action-oriented budget based on an introspection. The overseas investor was winning, and therefore they have, brought in the abolition of angel tax. They've also said that, we will go in for a overhaul of the tax regime to make it simple and, predictable. So, creating a much more trust-based environment. And obviously followed with all the policy announcements around infra, energy, addressing the job content. So, all of that will augur well, if I have to look at the M&A overall.
Sure.
I think the angel tax key issue, I think, will be basically, now people will not, not dare to ask for the right price. Earlier, if you were asking for the right price for your company, you were being taxed. Now, I think that will be gone. So the confidence will increase from the, startup ecosystem. That's, I think, the biggest gain I see on this one. Coming to OFS, I think, it's a little technical and I might take a little time, Nisha, here. There was a law which allowed, unlisted shareholders to take a benefit of a listed scenario, whereby if they were to offer their shares in an IPO, they could get the lower tax regime of, at that time, 10% and now 12.5%. Provided, they had participated in the OFS, and even if the shares were unlisted as of January 31, 2018, because if you recollect, January 31, 2018 was the cutoff from when capital gains, for listed securities again became taxable, and they grandfathered the market value till that date. So for this, scenario for unlisted shares, they had covered one specific situation as to how the fair market value will be, determined, and they'd assumed that that will apply for all types of unlisted shares.